where the rivers flow, chasing the stars with a fearless stride. My funded futures take me worldwide. My funded futures light the way, breaking through night into brighter days. My funded TV shows the scene, living my life like a vivid dream. The clock keeps ticking, but I won't slow down. Building my empire in this buzzing town, casting my vision on the silver screen. My funded life, a vivid sheen. My funded futures light the way.
Good morning, traders. Happy terrific Thursday. Welcome to My Funded Futures and My Funded TV. I am Terry Trace 100, and we have our expert traders, Bull, Barbie, and Nick does futures. Good morning, everyone. How are you this morning?
Doing pretty well.
Not as good as Barbie. She just got her a new wheel.
I know, the new car.
Hmm.
It's becoming a bit of a situation. We got a bit of a collection growing over here.
Yeah, that car is older than me. You know, it still looks good. You know, but it's still older than me.
It looks
Not my only one older than you.
It looks so good. Follow everyone on the social medias on Instagram, and you can see Bull Barbie's video on it. It's super cool. Cool car.
I got it for Tom. I think Tom will like getting a ride in the little German Roadster. A little more his style.
Tom, yeah, speaking of Tom, I visited Tom during your live stream during London. Super fun. Yeah, so who'd like to take a look at the charts first? Get us started. We made all new highs again. Incredible.
Yeah, I know. I'll go first because I think it's gonna be pretty quick. I'll start with a recap from yesterday. As you guys remember, let's see if we get switched over here. Screen. Okay.
Is it working?
Anyways, in the meantime, we don't have NFP tomorrow, guys. So NFP has been suspended at the moment, and we had news this morning that was supposed to happen, but that got moved. The only thing that we have for tomorrow is 10 a.m. news, ISM PMI at 10 a.m. So
okay,
that's the only thing we have. That's about it. Everything else, like it says it on Forex Factor as tentative, but I'm hearing, you know, it's suspended, it's canceled, and things like that. So I'm gonna share my screen now if we can.
Sorry about the tech delay, you guys. Oh, here we go.
All right. So, anyways, here. Okay. Yeah. There we go. Here we go.
There we go.
The government shutdown.
Like, Nick's charts are looking cute today. So pretty.
Yeah, and your dreams, Barbie. But anyways, the government shut down. You know, and the charts aren't loading. So, but remember, yesterday I was talking about we were hovering right around weekly open. You know, and it only takes a couple of candles for us really to explode either way. So I think yesterday around this time, like 9 a.m., 10 a.m. yesterday, we were at weekly open, you know, on that big move down. Luckily, I was able to take advantage of that move. So let me break that down for you guys here. On the 4-hour from yesterday, I was watching. This is previous day low right here. So this was a pretty big level for me that was hit. And it wasn't the fact that it was hit. It was the fact that reaction away from it. So this was the 10 a.m. candle right here. I was like, okay, I'm anticipating the 10 a.m. 4-hour candle to really, really expand to the upside. And, you know, it did. It worked out. So going into yesterday, you guys heard me talk about that 15-minute gap, right? This was that 15-minute gap that we are watching. And you combine that with the fact that we had news. Let me go to the red folder news thing here. We had news like right here. So if you would have got in beforehand on the 5-minute, you would have got stopped out, right? You would have, it would have been looking good, but then it came back down. That's why I always wait for news right there. So, and then it finally got that move up. Had the 5-minute inverse right here. I added in some right here around like 8:05, and then I added in full position right around like 8:14, I believe. So I think my total profit, total risk to reward targeting up to this previous day high was right around. Actually, check my Discord here. Yeah, so 8:14 was my total entry right here. So 8:14 right up here for a 2-hour trade. I don't know why it's not loading. So yeah, overall, pretty good trade right there. And obviously it ripped the rest of the way. Did kind of edge me here for a second. I was like, man, are we really not gonna run previous day high and just like completely just die here? But held strong, and yeah, good trade. As for today though, going to the hourly chart again, we have these Asia lows in here, right? It's been a classic just expansion, right? And you're typically going to see that on NFP weeks. You'll see like the Wednesday will make the high or low of the week, and then with that news driver, if it pairs up nicely on Friday with that expansion that we had the past 2 days, you'll see it really start to expand. So I think that's kind of what we're seeing right now. I have these hourly gaps here marked off for some targets. What you could do here is, since this is the low of the week, you could plot these out. These could be targets. So your next target would be right here at 25,194 and then 25,334. That's the only thing you can do at all-time highs. And you would do this from the move up before the move down that takes that sets the low of the week, right? Before the big move happens. So that's how I like to draw them right there. So that's what I'm watching on NQ. It's sort of the same on ES. I'll draw those out for you guys that just trade ES. Yeah, so you got some targets there to watch, but same gap that I'm watching for here on NQ is right around here. So basically the 7 a.m. candle, that is 67.76, and then on NQ that is 25,143. So if we just close below that, I will say I could see a scenario where we get down to Asia lows and retrace and rebalance some of these inefficiencies that we made overnight, right? So yeah, so just watch out for that. Gold ripped back to all-time highs. I think it's going to be, I think the obvious draw here is this Wednesday high from yesterday. It's just I don't have any points of interest to frame for price to get in there. You could look at this 15-minute gap. The only thing is it's right at 9:30 is when this will form. So it's probably more than likely it's going to run here rather than give a close and then give a retracement and then go higher. But I'll set my alert there. Keep you guys notified on that. But yeah, overall, just watching these hourly gaps here. Yeah, no, that's pretty much it. I think I'm 1 for 1 on the week. So just slow and steady. Monday, Tuesday we're pretty choppy to me. I mean, look at this daily candle. It was an inside on Tuesday. On ES, it did in fact run that previous day high right here. But yeah, pretty small candles though. If you were just looking at this, right? So Monday, Tuesday, Wednesday, Thursday, where would you want to participate? You probably want to participate in here, Wednesday, Thursday so far, right? So that's what we try to do. So what happens when you find time and price with ICT concepts.
Great trade, Nick. I saw you posted on your X, I think your X or your Instagram account, that I think you made $5,000 on that trade.
Yeah, no, it was pretty good. It was about 1,200 per account. It was about 9 accounts, so it was pretty good. Yeah, it was a good trade. Yeah. I try to like size up. If I feel like if it's already Wednesday and I haven't taken a trade yet, I'm like, okay, if I see an A+ setup, I'm gonna go more size than usual because I want to make a good bit for waiting, right? You know, if like people are like, oh well, $5,000 a day times 252 trading days, you know, that make you be a millionaire, but you're not gonna have a trade every day, so you have to make up for that as well.
Thank you, Nick. Barbie, what are you thinking this morning?
Well, so we have kind of the classic gap setup here. So, I mean, we're obviously in a bullish market, right? This kind of the freight train analogy has been brought up a lot. Yeah, it's freight train right now. We are at all-time highs again. I will tell y'all, just straight up shorting all-time highs is against my religion. It has served me very well. It's kept me out of a lot of trouble. So I'm going to be not just shorting. I think we get this idea is like, oh, what comes up must come down. Well, sure, but you don't want to stand in front of a lot of power. Like just
doesn't mean it needs to come all the way down.
Yeah, and just because it's at the all-time high, that doesn't mean that that's the spot that it's ready to come down from. And so when you're looking at, that's why we study the auction process, and auction theory is really important, because then you can kind of see what we're looking for has the auction been completed up higher or not? And it hasn't been today, or really this whole week, but we do have this gap set up too. So we do have kind of a short trade setting up. Here's the way I look at it though. Some traders are really comfortable just taking whatever setup comes up. So even if we're extremely bullish, they can take that short setup. For me, when we're this bullish on the hourly, this bullish on the 4 hour, even though we're kind of at kind of a nice extension that the price can come down for, the safer trade for me is waiting for that price to come lower and then buy something. So I'm kind of framing everything in that perspective. So the main levels that I'm kind of looking at, a lot of times when we have price just open and then go like this, it'll end up, on the regular trading hours, we're going to be working up higher. So we're looking to see if it's going to be a gap and go. When the overnight has not made any effort to pull back down yet, that is kind of one of the main things that I'm looking for. So we could see the price just rip through and continue higher. This level up here, this would be a new all-time high, but it is a calculation of where the price is likely to be stalling. It doesn't mean it's going to. That's around the 67.85. Kind of the safer move to me that I'm really going to be looking for is to see where price moves back lower. So the main levels that I'm watching are the high from yesterday, because we've already traveled up and away from that. So that'll kind of be the first spot. That's kind of right around the 67.70 level. And then below that, we had this swing low, and it's ended up being basically the overnight low as well, the swing low from the close of yesterday. So I'm really watching that level as well at 67.55. The way these gaps a lot of times work, or when we have these movements away, I don't know where this gap's going to kind of end up being. If it ends up here on this 85 level, a lot of times I'm looking for that half retracement, and that also is lining right up with that 66.70 level. So that's the first one that I'm going to be watching, just to see if we're going to keep on the continued trend. Even when we're in a really strong uptrend, a lot of times there is that that little retracement back on some of the lower time frame charts. So that's kind of what I'm looking to pick up in here, instead of just trying to buy. It could just go and I could miss out with this more conservative approach. But I did have a good trade yesterday. I remember they were calling me greedy. Who was calling me greedy because I was going for this high? Maybe not so much. I only got half of that anyway.
It was such a great trade. Yeah, definitely not greedy.
That is the way I kind of frame it. And I'm going to kind of, Nick was talking about this earlier too, so I want to re-emphasize this. We don't have the same opportunity every day. So when you see a really great setup, that's the time to hit it hard. And I also stopped focusing on those daily goals so much, because it was getting in my head. It's like, well, I have to find that trade today. And there may not be a high value trade every day. So when I zoom out and look at it over the big time, I know I might have even a few weeks where I'm just not finding really big setups. And my job then is just to protect my capital by not getting into too much trouble in the markets and just waiting for that really great setup like we got yesterday. So
Thanks, Barbie.
well, it all works out. It's that patience again.
Yeah.
It's always that patience.
It's that patience and that discipline to like wait and to not overtrade and to be patient for that A++ setup. Nick, you're really good at it too. Like how you didn't take trades on Monday, didn't take anything on Tuesday. Wednesday, you're like, let's go. Let me swing for the fences. Yeah.
Yeah, no, I mean, you just sometimes it's man, trainings are so hard because like it's hard to do that every single day because like you're not in the same mindset every single day, you know. It's just
Right.
it's so much easier to follow that on a day where it's a half day for trading, right? Like, oh, okay, I don't really expect anything, but like as soon as the market starts moving a good bit, and you're like, man, like you know, these thoughts just get in your head, and like we all fall victim. Like I'm not like I'm nowhere close to like where I want to be, but you know, it's every day. You just got to keep improving, right? I think showing up every single day, whether you take a trade or not, is an example of improvement. What do they say? If you're insane, you're only insane if you keep doing the same thing over and over and never learning from any of your mistakes. So don't be insane.
No. So I heard you both say like the like getting out of the mindset of trying to make money every single day, right? Like I think for a lot of people, myself included, like coming from working like a 9 to 5 type of job, it's like you feel this impulse to try and like take out money every day, but that's not how the market works as far as like the best setups and whatever it is for you. What are some tips to kind of help people get out of that mindset and be more patient?
You saying like trying to like try to get out of the process of trying to make money every single day?
Yeah, exactly. Like any tips or advice on getting out of that mindset? Because I think a lot of people get stuck in that. Like, oh, I have to make $200 every day to replace my
Well, I
income,
think that's
you
the
know?
problem right there is like why do you have to make $200, bro? So there's a reason why each person has to make whatever like why they think they need to make that, right?
Mhm.
It could be I want to get payout before Friday so I can buy this ticket to go here or whatever. So, but the more you think about stuff like that, the more it's just you know you just kind of inflicting harm on yourself. Maybe not now, but like in the future. So you kind of have to let go of the unknown of when you're going to take a trade. And those trading's a lot like life. You know, there's a lot more gray than there is black and white. So um, you just kind of have to take what every day gives you. Like I don't know, like the charts, you know, the market goes up and down. Like that's probably being like the black and the white, but I don't know what it's gonna do every single day. Like you know, yesterday we had a big move up. We could completely reverse. You know, that's part of the unknown. So, I think you have to get off you got to be more process oriented. I think I've always talked about that, but I think Barbie's gonna say something along those lines too.
Yeah, Nick's wrong. No, I mean, I think I'll just tell you kind of from my perspective, I guess the way I think about it. There's For me, it's always about zooming out. So starting day trading, I was always looking on the 1 minute chart because I didn't want to miss anything, right?
Mm-hmm.
And
Mhm.
it's kind of the same thing. We feel like we're going to miss something if we're not focusing on every little thing and every single day. But for me, it's big picture. And if somebody came to you and said, you know, if you just wait for your very best setups and you only take a few trades a month and you just wait for the very best ones and it'll pay you $15,000 this month, you would wait for it. So the thing is just that unknown. That unknown makes us feel like we have to get every single thing, but we don't. And the more experience you get, the more you kind of, I think, find out that it really waiting for that A+ setup really is a thing. It really does work, and it really is what the profitable traders are doing. So it's always big picture. That's the same thing like Nick was talking about, where you shouldn't be trying to like pay all your bills in one trade today. That's putting a lot of expectations on yourself and the market that's just not really necessarily there. it's much better to think about, do I want to be wealthy in general? Like, do I want the answer to this one bill or this one thing that I want to go buy right now? Or do I want the answer to all of the bills in the future and to not have this stress ongoing? And that's big picture. It's not forcing something today.
Thank
Yeah,
you, Barbie.
100%.
Thanks, Nick. Chat, what are you guys thinking today? Long or short or no trade? Let us know in chat. Type in S if you're going to be looking for longs. Type in L's, or type in S if you're looking for shorts. Type in L if you're looking for longs, or N, no trades.
Let's see here.
All-time highs. Ooh, kind of exciting. Yeah, I did see some people say that they're not going to trade today because it's all-time highs. Like, it's just not their jam, right? Like, it can be very tricky.
Well, what were you saying the day after all-time highs are ran? 90% of the times it's retraced to the previous day high.
So in pre-market, if it makes an all new high in pre-market, the statistics, like looking back on, data for a long time, I don't know how long, but it was a very high probability that we would go and test yesterday's high. So that is something to kind of look for, perhaps. But it's tricky though, because then that would be a short, and this is all-time highs.
Well, that's why I had that's exactly part of my plan, that previous day high right there. I don't have to short to it. I can wait and see if we get there and buy it. That's the plan.
Yes.
That was literally my plan.
Little Barbie. Yes.
That's just kind of how we treat the price movements that go this way. We did have a question. I'm going to circle back because I saw this question, but we had kind of moved on. But I'm going to circle back. So when you're waiting for these big moves and you're trading in a prop firm, this is where we can get in our heads a little bit, because the prop firm rules say that you have to have 5 trading days. So it makes you feel like you have to trade every day. Sometimes I will just put on a little trade just to try something, and it might be in micros. But if I'm going to put on a big meaty trade, that's the one that I'm waiting all week for. Or it may not happen every week, but that's the big one that I'm waiting for, that I'm going to put all the size on. And sometimes we do have to play that game a little bit, but that's where the sizing comes in. And sometimes you do just take a little trade to get your stats going, but you shouldn't at the same time. This is where prop firms are harder than trading live accounts. This is like that whole mental game of prop firms. You have to that's part of your plan, whether it's just to kind of get a trade in for your stats that day and have it be a smaller trade, or if you're going to go into your full position and have it be a big money-making trade. And that's when I kind of break it down into like that A+ setup versus a C setup. So I might take a B or C in micros to keep my prop account going, even though I don't really want to. That is part of the game. And then when I have that big setup, that's when I'm going to get real serious about it.
No, I'd be lying too if I said I didn't do that before too. But honestly, I do a lot of videos on like prop firm rules on my YouTube channel and think 9:30 open just now. One thing I have noticed is when I stop caring so much about the rules on all these prop firms, unless it's just like at least some of the ones that like MyFundedFutures and some other ones. Oh wow, we got a little special guest here in about 2 minutes. One thing I've noticed is that if you just trade, all those rules kind of work out for themselves. Like obviously there's some like basic parameters in there that you need to like consistency rule, things like that. But yeah, other than that, it's pretty it kind of takes care of itself. 9:30 open.
Market is open. I hopped in a momentum short, and I'm testing out this bracket idea where it's just set 200 for 400, and it's just set, and I don't do anything. I don't move anything. I just like let it work, and looking for like a momentum type of trade. And so we'll see if it works or not. I don't know. I'm kind of playing around with this idea to just trying it out. I'm trying it on for size. We do
new strategy, new day, dangerous.
I I know. The 5-minute orb, you guys. Oh my God. I was looking at the numbers. I think it had like 3 days where the losses were like really big. So I'm just like, oh, makes me feel so like queasy. Yeah, that is a good point, Barbie. The strategy hopping, have dangerous to do that. Not recommended. So my TP is at 133 and my stop is at 163.
Gold just hit that level I was talking about. Like I said, I was like, it's probably going to run this level beforehand. I'm hands off on gold now. Now that we've hit that, I may go just kind of watch indices here and see how we close at 10 o'clock. Honestly, I just don't. I just got to see more. I think every time I see a huge move up, I can see overnight. Just see these lows getting taken, especially if it invalidates like one area. I can get pretty bloody pretty quick.
Yeah, gold is wild. My TP did get hit, so that's good. I am going to track these stats and just to see what happens, right, over time. We do have a special guest today. Luke will be on the show with us to announce the exciting new promo. Are you guys so excited?
So we have
you're
something
here.
interesting coming at 10 a.m. Eastern. That would be 8 a.m. Mountain Time. I feel like the Mountain Time people always get left out. It's always Eastern, Pacific, sometimes Central.
Central.
But alas, there you go. Central. We got a lot of Central folks. But that's right. At 10 a.m., we have something very interesting coming out. But ahead of that, I want to drop a thank you to everybody who comes and hangs out with us every day. How's that?
I love it. Yes.
All right. I'm going to drop some codes in the chat. We're going to have 100% off code for core accounts, 20 core accounts. And then I'm also going to have a 90% off code for any plan. 40
Oh my God.
I know. But I think we might be
good.
down to 19 uses on the codes because Terry already used them. She saw them in our chat and used them a lot.
So we got 20 for 100, 20 for 90?
Yes, that's exactly it. What should we do first?
Let's do the 90 first, I think.
Yeah, let's probably get the temperature up. Let's do 90 and then we'll do 100.
Do the 100% off for a finale.
Yeah.
All right. This is going in the chat. It's
Hey, Luke,
not
just
going
a
to be on
reminder.
the screen.
100% means free, by the way, you guys. I know some of you guys are just made a big deal about the $1 account with a month ago. It's it's $1, so this is free. Okay. Go ahead.
Again, this is to celebrate that we've got a big announcement coming at 10 a.m. I know that a lot of people are going to tune in just at 10 to hear the announcement and then leave. But for those of you who hang out with us all morning, this is something a little special for you. Code is going in the chat now. It's there. It's 90 off 20, 90 OFF 20, 90% off any plan, 20 uses. Have at it.
Good luck. Let us know if you got one.
All right. Let's see how smart our audience is. I did not make these codes, full disclosure, because it's embarrassing. But I did mention that the next code would be 100% off core accounts. And the code is 100 off 20.
I was like, is someone going to go ahead and get ahead of it? You know what I mean?
I didn't make it, I swear, guys.
No one not claiming that one.
To create us 2 codes in a jiffy again, just to we got something interesting coming at 10 a.m. so in about 25 minutes, and just to again get a little thank you to all you who hang out with us all day, not just show up for the announcement.
I love this. Thanks, Luke. You come bearing prizes and presents, surprises. Woo. I love it.
Yes.
But maybe we got something spooky cooking for Halloween? You know, I hear you're a big Halloween guy.
I do love Halloween. I think Halloween is a great holiday.
I've already started. I got my skeletons.
Yes.
Yeah, I sent something to Luke for his birthday. It's kind of Halloween related. It wasn't his birthday. It was for a wedding gift. So I know he's a big, Halloween guy.
Yes. I love Halloween. Last year I was in Italy for Halloween. And okay, this is a total I'll let you get back to trading. But what's crazy is like in USA, like all the kids, they dress as whatever they want. You got a Spider-Man, you got a Hulk, you got a ghost, you got a witch, In Italy, every single boy was a ghost and every single girl was a witch. There's here we have hundreds of costumes. It was so cute. It's like, that's the, you're a girl, you're a witch, you're a boy, you're a ghost. That's it. So I don't know. Cool cultural experience. I will stop interrupting and I'll be back in about 20 minutes for this announcement we have.
Exciting.
Boom.
Thanks, Luke. We'll see you soon.
See you guys soon.
All right.
Nick, is that your chart up?
That's not my chart.
The pretty pink chart is Nick's.
No chance.
It's got all the ICT stuff on it.
Yeah, too many of those ICT dweebs yesterday. Y'all were watching a stream. Y'all completely missed the move yesterday, probably. He said don't trade. You're like, I can't trade. ICT said don't trade.
You can't trade, the government shut down.
Well, it's the market makers manipulating you guys.
They manipulated the whole government into shutting down.
Yeah, exactly. So
the market runs everything.
I will say NQ is. It looks like the only logical place for this to go is Asia lows right here. So
it's that same area as yesterday's high.
I know.
Very good little area there.
Let's see here.
The nice thing is NASDAQ has more room on this move lower than ES does. So
yeah, but the problem is NQ's already fallen off the cliff. I was going to look at short on ES, but I'm a little late here.
Yeah, I'm still waiting for the long.
I'm a little late here. I'm really just basing sort of everything off of the fact that NQ is way down here. So I'm kind of playing like a six sister approach on the ES right now, hoping it'll go lower.
That was so nice. I wasn't expecting Luke to bring presents before the announcement.
Yeah, it's good that you did that.
I saw a bunch of people getting it in chat. Yeah, market is still pulling back. Ooh, hard not to feel some FOMO, but it is all good. NQ is up by about 60 points right now. Filling that overnight gap from yesterday's New York close.
I think we could be reaching for these relative equal lows at 67, 63 in London. I think that could easily be, a target there. Let's see here. What happened? Yeah, we had 90 and 100% off codes. Luke came in here and dropped them. So, but there's some more news coming at 10 o'clock. So.
Or MyFunded news, since government has banned data releases. Not exactly. I'm being dramatic.
we have news and our data releases. Yes. I wonder when they'll come together and come up with a deal. I think the last shutdown, like, it went a long time. Oof. So does that just mean we won't get any numbers until they figure it all out, even next week?
Yeah, I mean,
some of the numbers are independent, but a lot of them are not.
I will say if the market's moving like it is now, we don't need those freaking numbers. You tell me the government shut down and we whipped to all-time highs?
Woo, party!
Yeah,
Like,
that's
kind of
true.
wild. Yeah.
Right. And look at this open. No
Yeah, there's
numbers.
definitely volatility right now. So
Maybe that's the secret. It just has to shut down more, more often.
maybe it's like, oh wow, the government. Maybe the market really didn't think much of our government anyway. It's kind of like majority of Americans. I don't really.
I'm with
maybe,
yeah.
maybe we'd be better off without a big government.
Could be onto something there.
Look at this, you guys. It is wanting to go to those overnight lows, Asia lows.
Yeah. So there's a gap in here on NQ. So I'm really watching these hourly relative equal lows. I think we're gonna get in there. But yeah. I mean, it makes sense, right? I mean, this is all like an overnight move, right? Like we usually will trace at least some parts of it. So type 1 in the chat if you guys got short.
I
And
did.
type 2 in the chat if you guys caught that code from Luke. Those 40 codes they gave away.
That was funny, Nick, when you're like, 100% off is free for those that need me to say that.
Well, I
Yeah.
tweeted it out on my on Twitter like last month when we did that when I was in the airport. I think he came on while I was in the airport. He announced it. 20 accounts are given away. And I had people on my Instagram and Twitter comments like, it still charged me $1. I'm like, dude, like, maybe you should just get a job. Maybe trading just ain't gonna work.
Yeah.
At this point in time.
Yeah.
No one, your mom ain't gonna tell you that.
Yeah, it is. Sometimes I'll see people like asking for accounts, like for free accounts, and like kind of going to different people asking for free stuff. And it's sad, right? Like if you're in a position where you're not able to afford an account, and at the same time, like one account is not going to make or break like your career, right? Like this is a long.
Well, I think you're wrong. Actually, I think it's gonna break your career.
It's gonna break it. Yeah.
No, definitely won't make it. But
no, it's not gonna make it. It's not gonna make it. It's one account. Yeah. But I understand, like some people are probably in very desperate situations, and yeah, exactly. Like, get a job. I've heard both of you guys say, like, do not quit your job and trade full time when you're just getting started. Like, no.
I don't know why people think that they can just quit a job and start trading one day. Like that's the thing that you do. Like this isn't really, really hard, and that's why only a few people are really great at it.
I did it, and I don't recommend it. It took longer than it should have. Because
I'm the special one. But I'm the special one. It's going to be me. I'm going to be the prodigy.
I mean, yeah, exactly. I won the trading competition. Like those are just rare breeds, right? You walked into that one. Sorry, Barbie. Like I had to lay that one out there.
You're just so humble, Nick. So humble.
Let's see. Okay, so we're inside the Asia range on NQ and ES right now. There's a gap in there. It's probably why we're bouncing here. I know I marked off these gaps up here. That was just honestly like a point for me that I was looking for longs if we respected it. I had a feeling that it wasn't going to respect it. That's hindsight now, but also like to plot those levels out just for invalidation. Like how this was trading lower and ES wasn't. So I took, you could take a six sister approach like I was talking about and anticipate that ES is going to come back up. So, which is what happened, right? But it would make sense to bounce from here. It would, if it's going to bounce, it would be like right around this Asia range. And then you could Great spot in the long. If we get a reaction from it, got to get a reaction first. Can't just start buying. Clearly not bullish, you guys. Okay. Yeah. We'll see, bro. You see all these hourly candles right here, man? So the green means bullish, red means bearish. I count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bearish candles across 30. So, and the market's still moving up.
Barbie, did you jump in along?
We didn't quite get down to that spot. Oh yeah, I probably should if we're gonna reclaim 70. I'm not in a hurry today, y'all. Had a big day yesterday.
Yeah, Louis says a good point. He's like, no, Nick, that 15-minute candle makes it bearish, obviously. Okay, all right. I know you're being sarcastic, Louis, but I mean, we see this all the time, though, right? I mean, look what happened yesterday. Like, it's like you guys just got short-term memory loss sometimes. Like had a big candle up here, and then this one goes lower. Everyone's like, oh my god, we need to go short. Like, then it just rips. Like, not saying we're gonna go higher, but like, just the market. You shouldn't be surprised with the market. It's always gonna be right. Nick is, I can't trade. Yeah, I can't trade, bro.
I see a question from Guarav. He says, hey, it's my second day in a 50K core account and I'm up $500 in my first day today. Up $200. Please, could you suggest what my daily profit target should be?
Don't set a daily profit target. And actually log out of the account right now. If you have $500 on 50K account, it's 10% on the account. Like, what are you gonna do here, bro? Like,
you don't need to try to. We were just talking about this earlier. You don't need to try to get all your profits in one day. And actually, on those 50Ks, a lot of the times, when you do the math on the consistency and the payout schedules, like there's really no point in trying to get $2,000 in a day. I haven't worked because there's a different accounts, and I've been meaning to work it out. Nick might have it worked out, but a lot of the times I'm just going for like $300 to $500 in a prop account, because that's when you look at the payout schedules and the payout limits and everything, that those sizes work really well. These are smaller accounts. These are not $1 million accounts.
Oh my!
Don't you have a formula kind of worked out, Nick? Is Nick broken? Did we break Nick?
No, I just chatted. I understand what I mean. What I meant on that one. It's like of the drawdown. Like, okay, guys. Like, you don't, when you have a 50K account, you don't have $50,000. You got like of the drawdown, right?
Exactly. So that's what I'm saying. These are small accounts. You should treat them like small accounts. So if you got to think about what you're working with. I mean, nobody's going to make $1 million today on $2,000. That's not normal. It's mathematically highly unrealistic. And we really are. So a 50K account has $2,000 of leverage. So keep that in mind for sure.
Yeah. So making 10% in a day would be $200. Like, that's really
I mean, it depends
good.
what your drawdown is. So, I mean, like, I'm guessing your drawdown is 2,500, 2,000. Yeah, I mean, your actually number is even higher. It's 25%. So you made 25% of the available money that you had, of the available leverage that you had. So, yeah, that's a good day, bro. That's a really good day.
Great day.
Yeah, for sure.
Congratulations.
Oops.
I was wrong on my number, but it wasn't 1%. If it was one, like, that's another thing. I think I pulled it up. I might have to pull it up again. Go to guides.
Well, while you're working on that, I just want to add, so when wealthy people are looking to put an investment on something, they're usually pretty happy if they get 10% in a year. And so you guys are getting disappointed over 20% in a day, and it blows my mind, because we've got multimillionaires looking to get to a 10% return or better in a year, and y'all are unhappy with getting that in a day.
All right, so I got it pulled up here. So I've pulled this up before. This is, sort of the drawdown sizing guide. So key word here is drawdown sizing. you know, because this is all based off of the drawdown, like 7 to 15%, not of the account, right? Of $50,000. You're basing it off the drawdown. So, so he made 25% of the drawdown on that trade, so $500 of his drawdown, so which is huge. If he does that 3 more times, he can get a payout. 4 more times, depending on how much of a payout he wants, but and what kind of account it is. So, yeah. So this is something I follow here, and I think this is, like if you're doing like 1%, like those are on personal accounts. Like the lower numbers are on personal accounts, because 1% of a of $50,000 account, which it's okay, but the drawdown on that, you're risking 25% of your drawdown. So it's better to be somewhere in this range of your drawdown. You know what I mean? So he was probably risking $200, $250 to get 25, which is fine, right? That's okay. Let's see, and save movement here. So yeah, that's you can screenshot that if you guys want. It's a pretty good example there, but that was what I was meaning there. Let's see, any other questions we got here in the chat? I know you guys got something cooking for me.
We're always up to something.
Nick's broken. What happened, Nick? Nice math skills, Nick. Let's go.
You got a mixed crowd over there.
Nick on fire today. Let's go. Put that back on, please. Okay, I'll put it back on. Here you go, bro. Yeah, I'll make it really big for you.
Ooh, nice.
I'm getting rage baited. Yeah, 100%. I just like having fun with keyboard warriors. Let's see. All right, so big bounce here. Could see. Okay, if you're going to long one of them, I'd probably long ES, if anything, because that's the one with the most reaction from here, biggest reaction. And also, it was the one that was late to drop, right? NQ was the leader in the clubhouse for shorts, which means ES should be the leader for longs if we flip. So I think a very aggressive approach would be to long somewhere in here. If we get an inverse here on the 5-minute, like you would want a good, strong close above here. And honestly, there's a smaller gap right here as well. And you would just look to target back to here. Because if we're looking at the daily now and the hourly, honestly, I can make a case for lower too inside this 4-hour gap. So just be very careful. Be very careful. 60K on a core. Nearly 600 people liking, watching. Yeah, let's like and subscribe. What's SMT? SMT is just it's just divergence, really. So there's not really one. Well, there is one right now. So if we look at the 15-minute on ES and NQ, at the session lows, right? Oh, this is actually a very good SMT. I like when you combine it with session highs and lows. So there is here SMT. So NQ ran Asia low, ES did not. And since then, we've had a nice reaction on ES. It's not enough of a reaction to long yet because we have not got above here. So, yeah, what we could see is something like this. It could come lower and then make a unicorn back up to the upside. So we'll see what happens. Boom, 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 boom. Barbie, you catch anything? Terry, you catch it? I know Terry went short, bro. I know Terry shorted the hell out of the market.
I'm still waiting.
I did.
I'm still waiting. So let's hear about Terry's.
Yeah, let me see if I can show you the trade. So this is the thing I'm playing around with, right? The set bracket right here. the 200 for 400. And then I'm going to track it and just basically trade momentum and speed of the market and just jump in, let it work. Either it works or it doesn't, and then I'll just track it over time. So that's kind of the idea that I'm playing with here. So fills in order, show trade lines. There we go. Can you see that? It's maybe on the 1 minute might be easier to see. Yep. So I hopped in because the speed was pushing down. I figured there would be an imbalance at the open, and then I got confirmation when I saw the price here going going down. So I just jumped in and then just let the bracket do the work. Did you like my sound effect, Barbie?
I was looking at some chat, but
Oh,
yeah, good sound effects too.
yeah. So that was the quick short $400 minus commission I caught.
The gap here. So it looks like we're respecting heading into the 10 a.m. close, 9 a.m. close at 10 o'clock. The hourly gap from Asia on NQ on ES. On NQ, it hasn't respect. We'll see how it closes, but I'm a little undecided at the moment because there is a 4-hour gap here, and this wick here looks kind of gnarly. So just because it comes down this 4-hour level doesn't make it bearish, right? I mean, it's just going to rebalance some of this huge move that we had yesterday. But we'll see what happens. Let's see if we can get a bounce here. No interest on gold. Yeah, I think the best thing to do is to play the IFEG setup on ES back up to the highs. You could look at something like a close here, stop here, up to these up to that standard deviation that I had. So that's a 15-point move.
MyFundedFutures asked chat how do you guys feel about the government shutdown? And
Great. Everything just shut down. I had a good trade. So
yeah, good trade yesterday. Good trade today. Yes.
1 minute, guys. 1 minute. That's pretty much what I've been saying the past 5 minutes is kind of like my thoughts going forward. Yeah, so we need a giveaway. Nice. Something like this would be nice. Also, too, watch and see if pay attention to how the lower time frames are reacting, right? It looks like NQ is starting to lead now to the upside. There is a tiny gap in here, but I would wait for ES. But the one thing is with NQ, I think you're going to have a better risk to reward with NQ. Yeah, you have a way better risk to reward on NQ longs, but that's only because it's the weaker pair. So you just have to deal with the risk of long in the weaker pair. Boom, 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 boom. Well, I would say I'll see you guys back here tomorrow for NFP Friday, but there is no NFP tomorrow.
Sold.
Wait, can you stay a few more minutes, Nick? Because Luke is coming back on.
Okay, I'll stay for a few more minutes. Come on down, Luke.
Let's go. Hey, Luke.
All right. I have some very important questions for the chat. And Barbie and Nick and Terry. Everybody gets to participate. You know, we think about this community. We're all participating. First question is, who likes free things? If you like things that are free, I want to see a show of hands, a one in the chat. You can do a little high five emoji in the chat, okay? But I want to see
as long as it's free and not $1.
Free things. All right. Here's the next question for you. This one's even crazier. Who wishes that your payout requests were just magically 4 times larger? Like, would that be a good thing for us?
Yes.
You like that? All right. What we have, and again, I want to thank everyone who's been hanging out with us all morning and every morning, is we have something called the Flex add-on for our scale plan. All right. I have got to relocate. 1 second. I'll be back.
Please hold.
Ooh.
Whoa, cliffhanger. This is so exciting.
I know he didn't mean to do that, but actually, that's awesome that he just did that.
I'll be right back. Oh, what could it be? It sounds really good.
Okay. Let's see. Nothing here that indicates I'm on long yet. Let me just talk about that. The hourly was a very.
Sorry to interrupt, Nick. Luke is back. I want to
Okay,
get Luke
sweet.
in so you can run out.
No, that was intentional to build suspense. All right. Again, I asked 2 questions. The first one was who likes free things? The second one was, wouldn't life just be better if our payout requests were 4 times larger? If you answered yes to one or both of those questions, today is your lucky day. Introducing the Flex add-on for the scale plan. Magnus, if you could get my screen share up in front of everyone. We are bringing to you an elevated sim-funded experience. It's as simple as that. So we have 3 plans. We have our core, we have our scale, we have our pro plan. They all have the same evaluation experience. Nothing is changing with the evaluation. But for the scale plan, we are raising your payout request maximums from $1,500 at the start all the way up to $6,000. You're going from 1 mini to 2 minis, which can scale all the way up to 5 minis as you work through the sim-funded experience. We have 1 to 10 contract scaling, and this add-on is entirely free. The way that it works is you go to checkout to buy a new scale plan. You'll see a selection that says that you want to add the Flex add-on. You work through your evaluation, and once you get to the sim-funded stage, you can request 50% of your profits. And again, your request maximum goes from $1,500 to $6,000. How about that?
And there's no coupon for that, right? You can just you just go check out, and then it's right there. You just select add-on, right?
Correct. This is a promo. I know a lot of firms they'll do promotions, or maybe they'll take some money off the top line. We're doing a promotion where we're giving you better and more interesting rules. The total all-in cost of the scale plan with the Flex add-on is $127. There are no activation fees. So what you pay upfront at your evaluation is all you pay. You can earn up to 5 payouts in the sim-funded experience, which means theoretically you could request withdrawals of up to $30,000 in your sim-funded experience. It's an 80-20 split. And again, this is something that we have been cooking up and we think is special for the community.
And can we have up to 5 of the 50K size scale plans?
You can have up to 5 of the 50K scale plans, correct?
Oh wow, that's a pretty big payout request cap. I think that's what people like the most on that. I think everyone in chat likes it. Type 1 in chat or W's in chat if you guys like that add-on.
That's incredible. So potentially you could request up to $30,000. And with only paying $127 for an eval, and that includes the activation fee, like there's no other fees after that. That's mind-blowing.
Yeah,
That's
that's exactly the idea. Like our opinion is that the scale plan is already a really competitive plan. The payouts that you could earn in sim start at $1,500. They scale higher. But we think, okay, rather than doing what some of these other firms do, where they just take these big discounts off the top, let's put our trust in our traders and let's give them the opportunity to earn more, and let's really jack up that payout request cap.
I love that. I want it. I'm gonna go get some.
All right.
Good stuff, Luke. Good stuff. I think chat since they're adding the 2 minis, I think it only applies to new plans, I believe. I don't know how they would do that if it wasn't.
Yeah, that's exactly it. You go through the checkout. We actually have an updated checkout as well, so check that out. It's a much simpler process. We condensed what was many pages into more seamless experience. But you'll go through the checkout. You'll select the Flex add-on. It will not raise what you pay by a dime. It doesn't add activation fees. It doesn't change your profit splits. Again, this is a promo on the rules side of things.
I love that. And use code YouTube when you check out because it helps to support the channel. Thanks,
That's
guys.
exactly it.
Good stuff. Good stuff, guys.
All right. I'm going to hang out in the YouTube chat for a little bit. So if people have questions, drop them there. I will be around and answering. But I will stop interrupting your trading experience.
Yeah.
Thank you, Luke.
Yeah, thanks,
Big
Luke. That was
news.
good.
Big news.
Awesome. Yeah, that's pretty good stuff there. I'm gonna head out here. Not a whole lot ever since we had this move down into this gap. So maybe just could be chop. I may give it about another 50 minutes. After that, I'm probably just gonna be hands off. So I'll see you guys back here tomorrow for Friday, I guess. No
For
NFT.
for a non NFP Friday.
Yeah, no, pretty much. So y'all take it easy. See you later, chat. Bring the heat tomorrow. You guys were a little weak on the hate today, so I'll see y'all then.
Bye, Nick.
Sometimes you just don't feed into the haters a little bit. That helps too. But I think Nick enjoys it a little bit.
He's good at the comebacks for sure. So
I'm still waiting here a little bit, even though I kind of saw that drop. You kind of make the judgments every day for your own personal trading, whether to take it or not. And coming off of a good day yesterday, I didn't want to take the drop, so I'm still waiting for signs of that turnaround. We are starting to kind of get it on NASDAQ, but I want to see it on both. Not there yet. Starting, but yeah, it's worth waiting for a good trade for me.
yeah, this is so helpful, Barbie, to see your charts, like what you're looking at and specifically what you're looking for before you hop in for that long, and to see NQ and ES. And I heard you say waiting for the confirmation on ES also to confirm.
Yeah, the ES is hanging out below the previous day high still, which is kind of one of my trigger points. Really, the 55 is my line in the sand. Below 55, I'm going to kind of stop looking for longs. But above it, I'm still waiting to see if that turnaround's going to happen.
Oh, Cheater says, I see dead candles.
What does that mean? How do candles be dead? I don't know.
Okay, so MyFundedFutures said you can withdraw 50% of profits generated in the sim funded experience. 80-20 split still. And so we can withdraw up to $6,000 per payout request with a scale accounts. And we can have up to 5 of them of the 50K size. So that's huge for only $127. Like, you cannot beat that. And it's end of day drawdown. Like, seriously, you guys, you just can't beat that. It's so good. I'm so excited. I wonder how long the promo's going till. Luke, are you still around?
So I was looking too. It just says limited time.
Yeah.
We'll see if we can find out for y'all.
It's going until a limited time.
Oh, okay. Well, so that means we have to snatch them up.
Yes,
Real
very
quick.
astute, Barbie. Yeah, exactly. I mean, what we try to do is we try to build with, the community and the feedback and the reception that we get on things. And if this is something that really works well for traders and we have a lot of demand for it, it'll go longer. If this is something that is not interesting, which we think it will be, then we'll get back to the workshop and start working on what else we could bring you all. How's
Thank
that?
you, Luke. Great. I do see a question before you go. A says the 6K is limited time. So once you purchase the account with that add-on, the account stays that way, right? Like
Correct.
even
Correct.
after the promo ends, it'll stay that
Exactly.
way.
100%. Good question. Cool.
I love that. Thank you.
All right. Thanks, guys.
Oh,
Right.
yeah.
What were we talking about? Okay, the levels.
The
Yeah.
levels. I know. I'm looking at your chart like, look at ES.
Yeah,
Oh,
I am still kind of looking down here to see if this is a spot on ES. I might try my knife catch thing at this on MES, but I'm not gonna go big long until we have signs that the market's ready. Right now, the VIX is still heating up, so I'm chill with that. I mean, if I'm wrong about this 55 level, I would rather see where the market feels like the bottom is and kind of put that bottom in instead of trying to like bottom tick this if this isn't the right spot. So that's kind of how I play my knife catches. I give it one go where it's just kind of dangerous, and then I wait to see if I'm going to get a real turnaround after that. That's kind of back to my having cake and eating it too mentality a little bit. You know how it is, the FOMO.
oh, totally. I like that though. To eat the cake and I wonder where that
At least I can
expression
get a
came
small piece if I'm early
from.
and right. But if I'm early and wrong, it won't ruin my account.
Yeah, it doesn't hurt. It's just like no biggie.
Queen of Trade says there's a 4-hour FEG below. There's a lot of kind of, so I would be looking at it as like a single print. I would be looking for single prints in there, and we do have some lower. So that is kind of the danger. The way I look at it, and this has served me pretty well. I actually went back and looked at the stats of some of my accounts. I have one that I've never taken a short trade in, and a lot of those do really well. So I am okay kind of waiting. And when we're in a bullish market and I want to wait for bullish trades, that might mean that on bearish days, I don't get that many hits in. But in the grand scheme of things, it serves me pretty well. So we'll see. The VIX is still a little hot, so I'm gonna wait and see if we get that cooling down. We are still net positive. That's important to note. So I know we sometimes see these big scary candles and we're like, oh no, the bulls have gone away. The market's scared. But a big move lower, this could be major profit taking up here too, because a whole bunch of people has made a lot of money overnight. So that doesn't mean that the whole market structure is shifting yet. It just means that we're having a healthy retracement. Because even a normal market, it's not going to just go straight up. It's going to, want to be putting in these kind of things like this. So are we in one of these? It's when the structure starts shifting that we can be a little more aggressive with the bearish stuff, in my opinion. Oh, so we got someone in chat is commenting that they pay more attention to the regular trading hour inefficiencies than the overnight ones, and that's kind of interesting too. I think you're onto something there. That's a cool little thing to add to that sort of strategy. I do show that both markets have hit the previous day high. NASDAQ has not hit settlement yet. I'm still kind of watching that 25,000 area on NASDAQ. That's kind of that spot where I like to see both of the markets kind of complete that same idea before going the other way. That's why I didn't super jump in at this 70 level up here too, is because the NASDAQ was still that was the previous day high on ES, but the NASDAQ previous day high was lower. So trade is going to have everybody synced up.
Yes, I love that about your trading, Barbie. Like with your style, you look for a lot of things to sync up. Like I've heard you talk about the VIX, looking at ES and NQ, and then I've heard you mention other things too in the past. I was like, it's like, yes, I like that. Gives you confidence for the A++ setup, like with all the having everything checked off. How did you come up with your style of trading?
I don't know if there's an answer to that.
Just over time? Like what felt good or what's worked and with back testing?
Yeah, so here's somebody saying, I'm going to be missing out on a lot of profits, the NASDAQ. This is that FOMO thing, you guys. Somebody could have a great trade here that works really great in their system. That doesn't mean that I have to take it. So if I'm going to rely on my system, I'm going to watch for my setups. That means sometimes I don't have a trade in a day. And I'm okay with that because big picture, I want to have millions of dollars and keep millions of dollars. And so I don't care if I miss out on 200 here or 200 there, because in my experience, like going for all of those little moves makes me less money. So I wanted, so I did this in real estate too, quality over quantity. It's always been quality over quantity. I could have sold 200, tract houses for a builder or one $10 million house, right? It's a lot more work to sell a $10 million house. It's a lot more stress. There's more risk because I'm putting a lot more eggs in one basket. But for me, that's my style, and I like that a little bit better. I would rather focus on a few things that are high quality setups to me that I can execute well. Because that's the thing, is like I can see someone else's setup, but I may not know how to execute it. So what's that going to do? It's not going to be very good. That's the way I try to look at it. So yeah, I could be missing out. I could be missing out on Terry's trade. I could be missing out on Nick's trade. I could be missing out on Ash's trade. And that's okay because I'm here for Barbie's trades. Hope that helps y'all. Like that was a big mindset shift for me because it's good to follow. I think it's good to follow other traders to kind of get ideas for how you're going to learn to trade. You gotta see what your options are and see what fits. Try on this strategy, try on that strategy. That's not to say hop around, like don't just live trade this one, then live trade that one. But I mean, study each strategy, go do the back testing and go do the homework and see if it jives with you. I know because I've looked at my stats. I just told you I looked at my stats that my long trades, I could, if I just only took long trades and didn't even take any shorts this year, I would still have made a lot of money. So I'm cool with it. I think, I've been talking a lot about the wealthy mindset versus the not wealthy mindset, and that's some of it too. Wealthy people don't feel like they have to pick up every little scrap. They're going for the big picture. They're going for the big important wins. It's where you want to dedicate your time. Because yeah, I could work all day long trying to come up with every single little trade, but I don't have to meet my goals. So. Did you come to trading, Terry? Did you come to trading because you want to sit in front of the computer, in front of the charts all day?
No.
Is that the appeal? No, you don't want to sit here all day and stare at numbers?
No, the opposite
No.
actually. Yeah, the opposite of working like an hour, 2 hours in front of the charts and then having the freedom and the flexibility to go do whatever you want for the rest of your day. Yeah.
Oh, okay, maybe we should do that instead then.
I agree. Sounds like a plan.
Yeah, when
So
the 1 hour's bullish and the 4 hours bullish, yeah, there's going to be some short trades in there. Like I was talking about, we get those pullbacks. But for me, I'm good waiting. I'm good with it.
yeah. It's okay to miss trades or to miss other people's trades. I like that. Do you guys want to look at the compound interest calculator with me? This gets me excited. I play around with this. Share this tab instead. While we're waiting for a good setup. Okay, there it is. So like to kind of help reinforce that getting these small wins is a good thing, right? Like small, but it's still big. So if we have a drawdown of $2,000 and we end the day with $200, like that's a 10% return. Like back to what Barbie was saying, that 10%, people are looking for 10% in a year. So I play around with this to kind of help reinforce that. Like, I don't need to swing for the fences. I don't need to try and make a 100% return in a day, even though like guilty as charged. I've definitely done that, right? And it usually doesn't end well, to be honest. Sometimes it ends well, but usually not. So in here, I put, so this is the investor.gov financial tool. And I put in $2,000 monthly contribution, just put it at 0 length of time. So I like to play around with this number. So this number, if you think of it, since we're day traders, it's really just based on days, right? But I mean, it's not realistic to think that every single day out of 60 days is going to be a 10% return, because we're also going to have days where we lose money. But this is just for fun, theoretically, just to help with the mindset piece. Okay, so estimated interest rate, I put 10%. Let's see what it is, compounded annually. So annually is really each day, right? Like if you were to theoretically compound it. So you take a $2,000 investment, you compound it 10% every single time. And over 60 times, you guys, it becomes over $600,000. The power of compounding. I think this is so cool. I just love to play with this tool. And then you can take a look here and look at the individual amounts. So every time it's compounding 10%, the previous number, and it just grows. Like even after, let's just look at like 20 times. 20 times, it's already at $13,000. So I think that's pretty cool. And the more it compounds, the bigger those numbers get. And then once you get down here, it like becomes huge numbers. Yeah, just something I like to play around with. Yeah, MG, 60 years is wild. Yeah, when I think about investing too, just investing in like the overall market for all the youngins and for like my nephew who is like 5 years old, I'm like, oh my gosh, like you have to invest early, like get these kids started early, not investment advice, just kind of how I think about things. But yeah, Barbie, what do you think of the compound calculator?
Oops. I pay attention to the compounding too. I don't expect to get 10% a day, like
No.
ever, just by the way. But I've made my own in Excel, and I just put it on 1% over 260 sessions. So it's like averaging. It's not every day, it's averaging 1%.
1%.
And that's kind of the way that I've always focused on it. I swear futures, and especially prop firms, like the math will kind of mess with your brain a little bit. And so that's why I like to really focus on sorry, I lost my train of thought a little bit here because I was looking at something else. But I really like to focus on the big picture, because it's like someone was saying, "Oh, Barbie, you're terrible. You missed this short." This short wasn't in my play. It wasn't in my plan. It wasn't in my playbook. I actually decided I was going to kind of let this short happen and grab the long again. But that's kind of again, like big picture. It's always zooming out and seeing big picture, because the math is so important. And you've got to understand, if you have a $2,000 drawdown and you're disappointed that you didn't make $5,000 today, you're disappointed you didn't make 250%.
Yeah.
And that you don't understand how hard that is. So I've talked about before a little bit how it's easier to trade small account or larger accounts than it is to trade smaller accounts. And it's because you have all these buffers and everything. What we're doing here is hard, and you guys have to remember that. So making $200 a day on $2,000 of leverage, that's 10%. That's really good. Like you should be bragging. I just made 10% today. Go brag to your mom, your dad, your sister, your cousin. I made 10% today. They won't even believe you, because that's too unbelievable. Yet in this space, we always feel like it's not enough. And You know, I guess if you've made a choice and you want this to be a stressful thing where you're trying to milk every last little second out, I guess more power to you. But that's not why most of us come to trading, and that's not really what we're looking for. We're looking for things that can pay out over the long term. You know, wealth, you guys, I think a lot of people think of it as like a windfall where you're just suddenly going to be dropped, wealth is going to drop upon you. But when you're trading and we're talking about compound interest, that's a lot of growth over time and things too, like compounding your gains, not interest in this case, compounding your gains. Um, it's not going to be overnight. It's a get rich slow scheme for real. $300 a day can snowball as you add accounts and add leverage and add strategies that are good and add all of this. It snowballs really quickly. So that's why we say stay with the basics, just basics until you can't even stand them anymore. And everything will start falling into place when you stop focusing on, I have to get this done today, whether the market gives it to me or not, using this little bitty account. And I know we're impatient. I know. I want it too, you guys. I haven't bought a car yet today. So I need to go make some more money. I feel you. But in the end, like I've been at just futures for just a few years, and the amount of damage that I've been able to do in a few years just focusing on the small wins is actually kind of crazy. Because for me, this is something I added to the options and everything else I was already trading. And that's why we give you the advice, like, don't quit your day job until you have the ball rolling here, until the snowball is starting, because you want to take that pressure off of you. And you're trying to create wealth more than you're trying to replace like hourly pay when you're setting your goals for trading. You may not know that until you really get involved in it.
Thanks, Barbie. Yeah, the Buckstar says, I want a Lambo. Me too. What do you think of the charts now? I'm seeing ES starting to turn up a little bit there.
Yeah, I am in my knife catch right now. So I'm probably going to look to add as we keep going here. I was looking at that, probably around that 70 level again. We'll see.
Go, Barbie, go.
The knife catch won. The thing is, these knife catches, I haven't actually tracked the statistics. I just know these knife catches hurt a lot, and that's why I have my rules on them. So yeah, I mean, I don't feel bad right now though, because right now my entry is 67.57. Holy shit. Okay, so I told you don't try to nail the low, but I wasn't actually trying to nail the low. I was just trying to get a piece if we got in here.
Woohoo! Winning. Let's go. I like this trade.
See if I can get my account correct here and put it up here. I'm only set up to share one chart.
Let's go in. It's so
I just
helpful
wanted
to
get
watch
that
you.
protected.
It's so helpful to watch you live trade, Barbie. Like to see like what you're looking at, what you're looking for, and then when you get in, like your targets.
I think what I'm going to do is actually put this way back up. I might just trail this instead. We'll see. I'm thinking about moving my target up and trailing there instead. I don't know. This move is not totally convincing yet, so we'll see.
Yeah.
We haven't broken out of this trend just yet.
When I picture like a good knife catch, like I picture someone catching the knife, like boom, like right in the middle of the hands, like perfectly.
That's what usually happens.
Yeah. Oh, Ash is in the house. Last minute thoughts before we head out for the day, Barbie?
I would just encourage everyone to, again, like, don't put everything on one trade, don't put everything on one account, and really think big picture. And there's a reason that everyone talks about the small wins, but get your base hits, because you can build off of that. You can build anything off of consistent base hits. So it's a good place to focus.
All right. We will see everyone bright and early tomorrow. Have a great day. And up next is Ash. Bye, guys.
Hey, good morning, everyone. Good morning or good day, depending on where you're from. Welcome back to another segment. Love the sound of that, chat. Use code BULLBREAK50 for 50 free resets. Who's going to get one? What a surprise. I'm right out the gate. I wasn't expecting that. Instant code. Couldn't even get to say good morning. Love to see it. Absolutely love to see it. Throw a W in chat if you're able to get one of them. Congratulations. Another day, another giveaway. Absolutely love to see it. All right, now I can say good morning to everybody. Good morning or good day. How's everybody doing today? How's everybody's day going so far? Who was able to get one? Throw a W in chat if you did. And let's see who we have here today. And then we'll get into the information. Good morning, MS. Good morning, Oats Trades. Good morning, Mercy. Good morning, Mick. Good morning, Spencer. Gold Hunter, what's up? Camilla, what's up? Abhishek, good morning. MG Wall Street, good morning. Andre, good morning. Nikhil, good morning. Good morning or good day, depending on where you're from. Welcome back to another segment with myself. Good morning, Koala. Good morning, Alex. Good morning, Thiago. Good morning, Tiger. Good morning, MRW. Good morning, Billy. Good morning, Bilo. Good morning, TT Trading. Alrighty, so I'm certain that they probably talked about it already, but let's hop over to the economic calendar real quick. This is quite important if you ask me. You probably saw it on social media or in the news, but the whole government shutdown, right? If they don't figure out the funding, then the government will be shut down until they do. Plain and simple. Processes like non-farm payroll. This is why it says tentative, because of the government shutdown. So I just want to point this out because this is one of the news events that are very important for us as traders. Okay, so correct me if I'm wrong, but I believe that they will not be releasing this news if the government remains shut down. It is important for us because that's a very important news driver for the week. Okay, so just wanted to make a note of that so that everybody was aware of it. I wasn't here during the morning segment, so I'm not sure if they already began to talk about it. But let's go ahead and update our biases. Let's update our information. Congratulations to all of the bulls. Congratulations to all of the bulls. If you were here in the beginning of the week, you would have saw that we were looking for a move to new all-time highs. We were looking for a move from this support to this level. We were looking for a bullish move to new all-time highs, and we completed that. Okay, so congratulations to the bulls. What a beautiful bias it was. Go ahead and fact check me if you'd like. In the beginning of the week, every single week, we do a weekly outlook. That way we can be prepared for the week. That way we can have a game plan. That way we can understand what we're looking at within the information for the week. Same thing here on NQ. Don't really need to go over it because it's the correlated pair. It should be moving the same at the same time. We were also looking for new all-time highs here on NQ. Price was being supported from this area here. We were looking for a move to this level here, which is new all-time highs, and we got that move. Beautiful move. Once again, congratulations to the bulls. Now, just like I was stating the other day, when you're capable of creating a game plan, that is how you understand how to approach the week. Once you get a game plan, once you get a result to it, you no longer have to force that game plan upon price, right? So we got a result to the bullish bias. Now it's a matter of going back to the sidelines and waiting for more information to develop. Right, so that's where I'm at for today. Today, I'll be waiting for more information to develop. We already did oil, Dixie, Euro. But for anybody that was not here that needs an update to the weekly outlooks, we were looking for lower prices. Price had swept a swing high. We were looking for a move lower. We had multiple targets. We had this unfilled imbalance here, this one here, and the equal lows. All the targets have been completed. So once again, it's the same thing I was just saying about NQ and ES. I have no interest in forcing myself upon that bias anymore. Dixie, we are getting that information we were looking for. So, for example, yesterday, what I had stated was we are looking to see if this area acts as support, right? So we're looking to see if this acts as support. We were looking for the daily candle closure, and let's take a look at that daily candle closure. You can see that price got supported by this area. Therefore, I would then start looking for higher prices. Okay, so now that we got the information that we were looking for, we were waiting for information stating whether this area was going to act as support or not. And take a look at these candles here. We're creating a swing low within that area of support. Therefore, I'll look for this to now be the target. Same thing here on Euro. This is exactly why the question mark was here, because this is what we were looking for in terms of information. Again, just go ahead and check out yesterday's live stream. We were looking to see if this area will be resistance for price. Look at how the candles are respecting this area. For that reason, we are now going to look for lower prices to here. Okay, so in terms of a bias, the only one that I have a bias for today, oh, hold on. The only biases that I have for today is on Euro and on Dixie. We'll look for lower prices on Euro. We'll look for higher prices on Dixie. Oil, we're waiting for new information. ES and NQ just completed its target. So it just completed a bias. So I will wait for information there as well. All right, so just to update our biases, just to update our weekly outlooks. If you have any questions about that, feel free to throw it in chat. Before we move on to the next portion of the segment, I'll give you guys a minute or two to see if you have any questions regarding that information. Feel free to throw it in chat now, and I'll hop over to chat. Any questions or information regarding the biases or the weekly outlooks? Ash, did I see you on X requesting 20K from that live account? Yes, I have taken $21,000 in payouts from a single 10K live account. Yes, I have. So I don't see any questions or information coming across about the biases or the weekly outlook. I'll go ahead and move into intraday action if that's the case. I'll come back and check in a second. All right, so we'll take a look at some intraday action as well now then. Oh, maybe, hold on. Sorry about that. Maybe my chat is just lagging because now the questions came across. So give me a second here. Ash, what do you think about just trading bullish unicorns? Like, are you saying you're only going to long the market? Is that what you're saying? If that's the case, you have to understand that the logic that you provide to your decision making is what's going to create the probabilities. A price action pattern is not enough. So if you're only looking to execute bullish unicorns, I don't think that's enough logic to guarantee a good result. You need to have sound logic for your decision making that's going to create the probabilities. A price action pattern is not enough. Is that from moving you to live from 4 core accounts? No, I was moved to live before the new accounts came out. I was using an expert 50K account. So that was before the new accounts came out. We're in our 5th month of the live account. Those new accounts came out a couple months ago. Ash, what's your plan in growing that live account and scaling position sizing? I divide my drawdown by 10. So when the balance increases, so does my position sizing. Right. So for example, if I have 10K of buffer to work with, then I divide that by 10. That allows me to use 1K of risk per trade. If I have 40K of buffer to work with, if I divide that by 10, then I have 4K of drawdown to work with. So I divide my drawdown by 10. So wherever the drawdown is how I scale. More drawdown equals larger position size. Ash is MFFU's most disciplined trader. No, I'm not going to take that credit. I do not. I think there's a lot of better traders out there. I am still a student of the market. I will always be learning, always be working. On top of the fact that I have nobody to compare to, this is a you versus you business. So it does not matter what other people are doing. What does matter is your own results. But simple enough. There's a lot better traders out there than me. I have a lot of work. I'm still a student. I'll continue to keep trying to get better each day. Hello, Ash. Just purchased an account and connected TradingView with Tradevate. Is it normal I can't trade gold? Go onto the MFFU dashboard. Go to billing. Make sure your subscriptions allow you to trade commodities. You have to make sure you have the data to trade gold. Okay. Go into your dashboard on the MyFundedFutures website. Go to billing. After clicking on billing, you can see subscriptions. That's where you can see your market data. Make sure you have the market data to allow you to trade gold. Ash, I can't remember, but do you rank unicorns? Yes, I do. Right. So a breaker block plus an FEG that has no higher time frame level and no SMT, I would call that lower probability. Right. A breaker block plus an FEG that is aligned with the higher time frame order flow, that has SMT supporting the idea, that is executed at a higher time frame level, that occurs during New York Open, that is a better position, in my opinion, than if none of those things occurred. So yes, there is logic that goes into my decision making that makes a position better or worse. The size of the FEG has nothing to do with that. We'll get into some intraday action any moment here. I just wanted to make sure I got through the questions. Now that my chat loaded, I'm just getting through the questions, and then we'll get into some intraday action. Ash, when is the shutdown going to end? I have no clue. Whenever they figure out their funding issues, I have no clue when that's going to happen. How does it work with taxes? Any advice on how to avoid paying high percentages? I am not a tax consultant. I am not an accountant. You should definitely talk to your accountant. Okay? Go get somebody to file your taxes and ask that question to them, an actual professional that deals with taxes. The only thing I could say is if you made a payout from MyFundedFutures, they will send you a 1099 at the end of the year, and that 1099 is what you need to bring to your accountant for them to file your taxes. Hey, good morning, Big Frank. Hope your day is going well. Ash used to stay longer on stream. Maybe we'll set that up. I need to talk to the back end first to see if that's even a possibility, but maybe we will set that up at some point in time. Hello, Ash. When you use SMT on the 15-minute, do you only use them with swing lows or highs, or can you use it with FEGs? I use it with both. So when price is at a higher time frame level, that's when I look for SMT. The higher time frame levels that I use are swing highs, swing lows, and FEGs. So when price taps into an FEG, I'll look for SMT. When price sweeps a swing high, I will look for SMT. All right, so any other information, any other questions, feel free to throw it in chat. If not, we can start to get into some intraday action as well. All right, so we'll get into some intraday action as well. So the information that I'm currently looking for, right? I told you that I'm now moving to the sidelines on NQ and ES and waiting for new information. The current information that I'm looking for is what happens here at this swing high. What happens at all-time highs, right? Here's the information that's going to help me make a decision, right? So here's your first option. I'm creating a candle so that you can see what I'm looking for. Ready? Here's the question that I'm asking myself, and this is the information that will be provided that will help me understand the next direction. Okay. We're at all-time highs. At all-time highs, did we sweep this area? What? Were we just grabbing liquidity above the highs? If we grab liquidity above the highs, this is what the formation of the candle will look like. Ready? A big upside down candle that has a huge seller's wick that closes back inside the range, right? The range being all-time highs. So that's why I'm leaving this level on the chart. Right? So look at the current candle that's being created. Okay, it's an upside down reversal candle at the moment. If we go and close back inside the range, that looks like a reversal candle. Then I would then look for a move lower. Right? So if we go and fill yesterday's imbalance, right, this gap right here, and when we fill that gap, we create a big reversal candle, that is the information that I'm looking for to tell me that I'm now going to look for lower prices. That's the first option. The second option is a candle that looks like this, right? If this candle turns around and we go and close back near the high of the day, right? If we go and close up here, that would make the candle look like this, right? A big bullish candle. If we go and displace through all-time highs, then I would look for continuation. So that's your two scenarios with the information that I'm currently looking for to understand the next direction. Do we get a big reversal candle here? Yes or no? Do we displace above all-time highs and close nicely above it? Yes or no? Once I get that information, that is the thing that will show me the next direction. Same thing here on NQ, right? It's the correlated asset. So I'm doing the same exact process here on NQ. Do we get a big reversal candle from today's action? Yes or no? Or are we going to displace through all-time highs and close nicely above it? That's the information that I need to know. Therefore, on intraday action, I'm going to leave this here because this is an important level, right? So now if we're looking at the market structure, we displaced lower this morning, right? Where it's creating a bearish fair value gap, a potential change in the state of delivery, right? So if they confirm this gap right here, right? It's not confirmed because it's a 3-candle pattern. So we would need this candle to close as well. If they confirm the gap with the change in the state of delivery and we remain below all-time highs, then I would look for some of these over here to get filled. Some of these gaps over here. So let's rewind this real quick and let's change the terminology so that all the traders in chat can understand what we're talking about here. Right? So very simple. Let's go back out to the daily. And we're looking at this area to act as resistance. Right? Do we get rejected from all-time highs? Yes or no? Will this be an area of resistance? It would look like an area of resistance if price gets rejected from it. Same exact thing here on ES. We are looking at this level, the level being all-time highs, to see if we get rejected from it. Will this be an area of resistance? So here's the level, right? Thinking about support or resistance, when you go and break a level, you would want to see resistance become support. So if price does not bounce from here then it looks like this area is becoming resistance. So that's the information that I'm moving forward with. That is how I'm understanding the next direction. Is all-time highs acting as resistance? Yes or no? That's the question that I'm looking for price to answer for me for the next direction. So in terms of intraday action, this is the level that I'm basing the decisions off of right here. Do we find support, right? Did resistance get broken and then turned into support, right? When resistance gets broken, we would like to see it be turned into support to think that we're going to get continuation. If there's no support shown here, then I will look for an additional move lower. All right, so now in terms of intraday action, this is the level that we will be watching right here on both NQ and ES. If they lose this level, then I would look for an additional move lower to fill some of these gaps. So if you have any questions or information now about the intraday action, now you understand the type of information that I look for to help me make decisions within day trading. If you have any type of information or questions regarding that, feel free to throw it in chat, and now we'll get questions about intraday action going. Notice the process that's happening here, right? Notice how during my segment, we always take a top-down approach, right? We always deal with our higher time frame bias first. The key there is that I would rather be aligned with the higher time frame than attempt to create a bias from the lower time frame. Reason being is there's going to be a lot of price fluctuations within the lower time frame. In my opinion, the higher time frame holds more influence than the lower time frame. That is why my actions align with that. I'm going to create my game plan from the higher time frame information. That is why we create a weekly outlook. That is why we get on the daily chart and create a daily bias. Then we get to the lower time frame. It's always a top-down analysis. All right, so if you have any information or any questions now about the intraday action, feel free to throw it in chat and we'll go over it. This is what we're looking for right here. Does all-time highs, does previous all-time highs get turned into support? Yes or no? This is what we're dealing with right now. It's very simple. Price doesn't care about your opinion. Price doesn't care about your feelings. Just read the chart for what it's giving you, right? If price is just going to slice through this level, it is not showing any form of support. If that's what price is going to do, then you've gotten your answer to this question, right? So it's not a matter of your opinion. It's a matter of efficiently reacting to price. So throw it in chat. Do we have any questions about the intraday action now? Ash, are we seeing a reversal or a pullback on gold? Let's take a look at gold. I really don't follow gold, but let's take a look. Incredible move higher here. Beautiful. All-time highs there on gold as well. So this would be the same exact question, but framed slightly differently. We're dealing with a daily gap, right? This would be the same exact question I have on NQ and ES. Does this area act as support? Yes or no? Right here, this daily gap. If that area acts as support, then I would call this a pullback for continuation higher. If price shows no respect to this level, then it looks like we have a deeper pullback coming. Same exact question as NQ and ES. And as of right now, right, we're dealing with that level, but it's sliced through that level during the first attempt. So it's not really showing very good support. Okay. Ash, do you prefer a unicorn model on the M5 or the M1? You could have it on either one. The time frame doesn't make the difference. It's the logic that you provide to your decision making that does. I've taken entries on the 1 minute chart. I've taken entries on the 5 minute chart. I've taken entries on the 15-minute chart. It's not the time frame that does it. It's the operator. It's the person executing the model. Do you think that ES will keep going lower? Well, it's not showing any signs of turning around, right? So what would be a sign of it turning around, right? A change in trend, right? Whether you want to hold on, I'm just trying to move this over. A change in trend, right? So here's a downtrend, right? We have not changed the trend ever since we started this downtrend. So yes, price has not shown any ability to turn around yet, right? Price changing the trend, right? If it broke through here, found support from the area that it broke out from, then I would say that it's turning around. But right now, it's not doing that. It would need to change the trend to make me think that it's turning around. Right now, it's not doing that. Right? So whether you want to use a trend line, whether you want to use an inversion, whether you want to use a change in the state of delivery, no matter what concept you want to use, right? You need some form of change in the state of delivery to think that it's turning around. And right now, there is none. So do I think it'll keep heading lower? Yeah, until proven otherwise, it is heading lower, right? It's currently heading lower. It's either moving to the top right of the chart or it's moving to the bottom right of the chart. And right now it's moving to the bottom right. How would you define acting as support? So exactly what I just had mentioned right there, right? So here's the level, right? If the level was showing support, price would have broke this downtrend and started heading higher. But price has not done that. Therefore, it's not showing any form of support, right? It's in a downtrend. It's heading lower. So the area that's in question is not showing any form of support. Ash, I noticed you take more unicorns on the 1 minute now. That's incorrect. Do you still only take 2 trades a week with the live account? That's just incorrect. I'm sorry. If I go and look at my data, I take more 5-minute trades than 1 minute trades. I'm not sure where you're getting that information from. The time that I look is 9:30 to 11:30, New York Open. Again, if you have any type of questions, any type of information, feel free to throw it in chat. We can go over any portion of this business. It doesn't have to be about intraday action. It doesn't have to be about bias. It could be about anything to do with this business. Feel free to throw it in chat. SBX going to crash. I highly suggest you zoom out a bit. If this is what a crash looks like to you, then we have drastically different opinions. We have been crushing new all-time highs for quite some time. The bulls have done a very phenomenal job. Maybe even zoom out a little bit further, because this is pretty clear to me. Is there any benefits to waiting for macro times? Macro times is not a real thing. That is just a rebranded terminology to help with marketing and advertising. People like to change the names of things so that they can create content and act as if they created something. That is a macro time is simply an hourly candle opening and closing. So it's just a rebranded name. I highly suggest you don't fall into the social media misinformation. You should just develop the skill on your own. Show up to the market, watch price action, figure out how you can best execute, how you can best identify price, and collect data on your own. If non-farm says tentative on Forex, would we not possibly get the, as of right now, we're not going to be getting the news. So as of right now, due to the government shutdown, they say that they're not going to release that information. Ash, when is your setup invalid? All right, so take a look at this. This is an example of a long position right here. This is what it would look like. I enter here and I put a stop loss at the low. So in terms of invalidation, it would be price gives me an entry at the location that I'm looking to enter, and this would be a stop loss, right? So if price goes below the low, then it is invalidated and I am wrong. So if you go and rewatch some of my streams, you'll see some of those invalidations. I have a 50% win rate. So if you go back and watch prior live streams, you'll see that sometimes I've taken wins, sometimes I've taken losses. So you can see examples of stop losses in prior live streams. Any other questions, any other information, feel free to throw it in chat as we're waiting and watching. Do you take only the trades that you upload to your Discord? No, there's been many times where I've documented a trade that I did not take. I show up and I work and learn every single day of the week. There's been many times that trades have been documented that I did not take the trade. Ash, what was the hardest markets you have traded? Hardest markets that I've traded. I would probably say crypto. I did not have the best experience with crypto. I do have long-term positions in Ethereum and Bitcoin, but when I was trying to day trade crypto, it was extremely hard. Without a doubt, there's like a timing aspect with NQ and ES, right? There's New York Open. The stock market opens at 9:30. News drivers, they occur at certain points in time, right? A normal news event is at 8:30 a.m. Eastern Standard Time or 10 a.m. Eastern Standard Time. So there's elements of time that you can easily see well in advance. Whereas in crypto, anything could happen at any point in time. It's like the Wild West. So day trading over in crypto did not go well. That's why I moved towards long-term positions there. I do still have my Bitcoin and my Ethereum. So that is more of an investment for me now. I only do day trading within ES and NQ now. There's just so much random volatility that could come into those markets at any point in time that is, you can't time it. There's no sense of time there. How is everybody doing today? I'm doing great. Thanks for asking, Emma. I hope your day is going well. How are you doing today? For all long-term trades, do you only use the model? No, long-term is more about fundamental analysis. The investing and day trading are two completely different conversations, in my opinion. So price action within long-term investing doesn't really mean anything to me. That's what I'm trying to say. When I'm looking at long-term investments, I'm looking at the stability of the company, the ownership, the management, its product, its prior year's data, right? Like, for example, you can go and look at the results of NVIDIA through looking at their earnings. You can go and look at Amazon's profit or loss for each quarter just by looking at their earnings, right? So that is the type of fundamental analysis that goes into long-term investing. In my opinion, I only invest into top shelf stuff, right? ES, NQ, Apple, Amazon, NVIDIA, things that are proven, not things that are new, things that have a long history, things that have a purpose in the world, right? Like, go outside and the first person you see, go and ask them what type of cell phone they have, right? Like, it's quite possible that they're going to have an iPhone. That's what I'm trying to say here. It has a purpose. Go ask somebody when they order something off of line if they've ordered it from Amazon. Right? So that's the type of fundamental analysis, things that have a purpose in this world, things that serve people, that have a long-standing, a good track record. That's the type of fundamental analysis I use when it comes to long-term investing. Right? The other type of long-term investing I have is real estate. Right? So it's very simple for me to say humans only need a couple things, right? Food, water, shelter. Right? So for me to be investing in real estate, I do think humans will always need some form of shelter. So there's that long-term need that I'm referring to. Very good question, though. Very, very good question. And I know that we talk about day trading here majority of the time on this channel, but maybe we should have some more long-term conversations because I've spoke about multiple sources of income, and we do need to diversify. We do need to spread out our risk across the markets. So do you invest in stocks, Ash? Yeah, that is exactly what we're talking about right now. Right? I have Amazon, I have SPY, I have QQQ, I have Bitcoin, I have Ethereum, I have Tesla. I do have long-term investments in stocks. Yes, I do. While executing on the 5-minute chart, do you use SMTs on the 1 hour as confirmation to look for entry? Yes. Yes, I want to be using higher time frame SMTs. Yes. SMT is the thing that acts as confirmation to whether you should engage with the market or not. Divergences, cracks in correlation, whatever you want to call it. Any other questions? Any other information? I got another 10 minutes here during my segment before Tom comes up next. My day is going well. Thanks for asking, Emirates. How was your day How was your day going so far? I've actively been watching MFTV, and I've only won 2 giveaways. You should be very excited that you've even won. It's very hard to win a giveaway. There's usually only 50 at a time, and there's over 500 people viewing. So the fact that you have one is a great accomplishment. So that's that, and you've won 2 actually. So that's very good. Ash, what do you do on days like today? Days like today, I show up and conduct my business. It does not matter what day it is. The process always remains the same. I show up, I document, I learn, I journal. I provide accountability to all the communities. We work and we learn every single chance we can get. Then once my session is done, I then go to the gym. After the gym, I then work on other businesses. So the process never changes. Fall in love with the process, allow the results to be a byproduct. So this is the same question about whether I take every single trade I post. No, I do not, right? If I see a position on a day that I'm not willing to risk, I'm still going to document it so I can learn from it, but I do not need to risk to learn. You can show up and you can create a game plan and get a result to that game plan without having to risk. Today is one of those days. Ash, where did you get your coach from? That one in the background? Am I missing something? I'm not sure what you mean there. Oh, are you saying couch? Did I read that wrong? That's not a real couch. Oh man, that's funny. That's just a green screen. That is just a green screen. I saw people winning almost every week, if not every day. How lucky can one be? I would have to heavily disagree with that. I do not think that people win the giveaways every single day. That would be a very hard task to complete. There's only 50 giveaways for about 500 people. So I'm sorry, but I'm going to have to disagree with that one. It's just up to chance. If you're here participating, you'll be able to get a chance to win a giveaway. But even with that, you have to be extremely quick because, again, there's only 50 of them for 500 people here. Do I use paid journaling services or Excel spreadsheets? You're looking at my journaling right in front of you right now. So my form of journaling is showing up and live streaming every single day. Right? That way I can hear what I'm thinking. I could get a recording of what happened in real time. That way I can go back and watch that recording at any point in time. So a free YouTube live stream, that is one way. I also document and journal in Discord and on Twitter. Also free areas to journal. So I journal via text. I journal via live stream, video recording, all free. Like I have a Discord that is now 8 years old because I've been journaling in there every single day for the past 8 years. Ash, do you prefer trading personal funds or props? I'm a huge component of diversifying. I have my own personal cash account. I have prop accounts. I have crypto accounts. I have long-term accounts. I have dividend accounts. I have real estate. So I spread my risk out across the markets. I spread my risk out across accounts. Right? So the reason why I diversify is because I'm trying to make it as hard as possible to blow up. Right? Like if you were to blow up one prop account and you still have your cash account right there waiting, right? Then you didn't just ruin all of your capital. You only ruined a portion of it. Right? So I diversify across markets, across accounts. So yes, I do have my own cash account. Did I say component or proponent? I didn't even realize. What's up, Ash? Hey, what's up, party? How are you doing today? Hope your day is going well. Yeah, my bad. Maybe I said component, not proponent. Who knows? Let's see if I say it again the next time. Do you see us at new all-time highs? We made a new all-time high today. So that has already happened. A newer all-time high. What we're currently looking at is right here. Right, so my entire question for intraday action is this right here. This was the prior all-time high, right? So in terms of support or resistance, when resistance is broken, right? We broke resistance here because we went to new all-time highs. Now I'm looking to see if that area of resistance is now turned into support. So that is the entire question that I'm waiting for the information on. To determine that information would be whether we get out of this downtrend or not, right? We've been making lower highs and lower lows all morning, right? So unless we make a new high, right, we break the trend, then I would continue to keep waiting. So it looks like this area is acting as support if we break out of this downtrend. That's what I'm sitting here saying. Ash, at what point did you break free from ICT specifically? I was never under control of ICT, so maybe I'm not understanding correctly, but I spent 5 years learning about charts completely upon my own. I don't classify myself as an ICT trader. I learned trading from staring at the charts, not from ICT. So I don't think I was ever under control of ICT. I don't classify myself as an ICT trader. I classify myself as a day trader. I spent 5 years staring at these charts on my lonesome, all by myself. So the chart is going to be your best educator. In my honest opinion, I think you need to put in the time yourself. You need to develop the skill on your own. Okay. Right. So, yeah. So the unicorn, right? That was something that came from ICT. But the difference here is that's a terminology. That is not a way that I learn the market. It's just a terminology. Right. So if you know anything about ICT, he uses different terminologies to market his content on social media. Right. So, and I've explained that here in chat many, many times. Right. So a breaker, right, is the same exact thing as a trend line breaking. Right. So take a look at this trend line right here. Notice how we broke this uptrend right here. Right. It was an uptrend that was broken. Well, guess what occurred there? A breaker block. Right. So you're saying the same exact thing, just with a different terminology. Right. So I've been trying to show people that for quite some time. There's nothing new under the sun. Okay. These things have been happening for hundreds of years. We have a new sus block. It's not new. That's what I'm trying to tell you. Let me show you something, and then I'll hop off here. I'll let Tom get in here. Was it on? Let's see if it was NQ or ES. Let me take a look. I think it might have been ES. Give me a second here. Give me 2 seconds and we'll hand it over. Okay. take a look at this. Ready? Take a look at this real quick. Hold on, I got to get out onto a higher time frame because it's so far back. Take a look at this real quick. All right, ready? All right, here we are in 1997. All right. In 1997, you can see that we have a fair value gap here. In 1997, you can see that the fair value gap also has volume imbalances, right? So your new concept of suspension blocks is not new. It occurred back in 1997, right? Here's your fair value gap plus volume imbalance, right? Your suspension block. So for everybody that wants to learn the new terminology, here it's not new. This is from 1997, and let's just take a look at the results real quick. Let's see what happens with this suspension block. Didn't really work too well. So once again, there is nothing new under the sun. All right. Don't fall into the terminology trap. I highly suggest you just focus on your own work, your own business. You learn from price action. You collect your own data. You build the muscle memory by going through the experience. All right. Don't fall into the new shiny object syndrome. You are better off collecting your own experience. Alrighty, that is the end of my segment. I'm going to go ahead and hand the mic over to Tom. Let's throw a bunch of W's in chat for Tom, and let's welcome him up onto stage. Have a nice day, everyone.
Hello, everybody. Welcome. This was great, Ash. Again, W's for Ash as well in the chat. Good to see everybody. I just love this example right here at the end of the segment. Thank you, Ash. Yeah, I was just kind of, I was streaming a London session today, and I was like, okay, what's the new thing? And what's its suspension block? Kind of a fancy name. I like it. Suspension block. Oh, you guys can hear? Okay. Everybody, you hear the music, or is it just me? Oh yeah. Okay, there's a code. I see it. Weave up what? Weave up Fate 50 for 53 resets. I gotta get it, man. I need a reset. How to get it? Come on, everybody. Okay, I'm almost there. Did you guys get it? Is it gone? Oh, I love free stuff. Not working, come on. You gotta be fast. You gotta be fast. Oh, that's awesome. Congratulations to the winners. 50 resets. That's awesome. You gotta be quick. I know you gotta be quick. I know. Not valid. Yeah, so it's gone. That's the problem. If it's not valid, it's gone. It happens. Okay, so yeah. So I was just what's the name again? Suspension block. It's good for a bumper sticker, right? Or something like that. But anyway, yeah, as Ash was explaining it, this thing is, in 1997, Or I guess we would find it in the early 90s, maybe in the late 80s as well. Who knows? I didn't get it. I was too slow. Anyway, congratulations to the winners. Welcome to mods. Abhishek, Lucas is here. I think is Magnus here? Magnus is here too. All right. Welcome, everybody. Good to see you guys. How was the day so far, everyone? Hope everybody's printing money or profit, as long as it's not, until it's not on your bank account, obviously it's just numbers on the screen. So yeah, interesting dump here. That was like, wow, what a move. Hey, good to see you guys. Doing great. I'm glad. Why do you like Quantower over Tradeaway? Well, I think I just got used to it. Like I started with Quantower in 2023, at the end of 23. And, obviously it's not a secret that I'm trading with the multiple prop firms. And it just made it easier to connect to multiple prop firms. That was the first idea when I got the Quantower. And ever since then, I stuck with it. Good to see you too. Shorted. Yeah, there's a 5-minute demand zone. So I'm just going to do a quick recap. And again, let me just say that what Ash was saying, like that was pure value. Look at how far are we from this 5-minute demand zone? We are about 20 points ish. Why not just go lower? I think we can, right? Trader H, welcome. May I ask, what contract do you use for gold trade? Mini, micro? Micro. I always go with the micro on gold. I never even pulled up the mini chart on gold. Like maybe, once or twice, but like 99% of the time micro. Always. So, yeah, always with the micro. So as I said, as Ash was also saying, these quote unquote concepts, are actually existing since basically decades. And there's nothing new under the sun. Everything is the same, Thank you, Debadeep. So everything is the same. Obviously, we can find fancy names. Actually, I think I'm gonna come up with a new name for these zones. Byte Logic. I just started using Quant, and I freaking love it. Let's go. I like it. So maybe you guys can help me to find like a fancy name for my demand and supply zones, Help me find a fancy name. I'm going to release a video series on my channel, and those are going to be my concepts, okay? I'm going to be the one who programmed the market with these demand and supply zones. That is exactly what I'm going to say. I have programmed and coded the market for these demand and supply zones. Sabo zones. Okay. Bucket and head. Nice. Yeah. The caboose zones. Concept with Tom Sabo, the Hungarian dictator. Oh my God. That's terrible. I'm not a dictator. Radio Man zone. I like it too. Radio Man zones. I'm definitely okay. I'm gonna, you guys can help me. I'm gonna come up with this, and these are gonna be my zones. I created them. I was the maker. I was the maker in the matrix. I was the architect in the system, or I don't know what ghost or whatever. I coded it. The market does what I coded, and these are gonna be my thing. Yes, effect. Hedge trim zone. The finish them zones. Okay, I like it. All right. Sorry, obviously I'm trolling a little bit here, but really, it seems like that would be a great marketing technique. The other ghosts. Yeah. All right. So, yeah, what happened so far? We went down into this. I don't know, whatever zone, whatever you want to call it, hedge trim zone or finish them zone. I don't know, demand zone on the 50, which was also a 1 hour level too. Kind of amazing. And I was actually, I'm having a great day. I took a nice trade on this drop, after the market opened up on my stream, entered a beautiful short. So I was holding it all the way down to the 15-minute demand zone. So that was an amazing trade. It was really good. And then I went to fool around on an evaluation account. I was heavily long on a position. I was kind of like wanted to go back to this super fancy thing, this what's first presentation gap. So this first presentation gap, I wanted to go long to return into that area. But eventually, as you can see, so the evaluation account is gone. Like in, yeah, it was anyway, it was almost at the reset timer, in a few days. So, it happens. It happens. But the short here was great. I took these on funded accounts, so I really loved it. We won new all-time high. If we go out to the 1 hour chart, obviously the way we look, on the 1 hour chart, this is just a healthy pullback, nothing extra, nothing special under the sun. Again, it could be just a healthy liquidity sweep, and did we sweep this low? No, we didn't. Wow. I'm just going to put a line here. Kind of interesting. Look at this. Sell side liquidity right there. And it didn't go down on the micro. I wonder if it went down on the mini. Let's check it on the mini. Ooh, this is interesting. This is something I talked about the other day. Okay. On the mini, that level is 992.75, and the low of this candle is 993.75. So it did not take it, which means there is a small little gap on the 1 hour chart. So we still have a sell side liquidity with a demand zone down there. I have a feeling that this is just enough for the market, especially because the mini didn't take it, just to go lower a little bit. But again, just to go through these levels, I did not have anything on the upside, obviously, all-time high. We took the 15-minute demand zone. I have a feeling that the current market conditions are a little bit like risk-off situation. Who knows? I don't really want to go into fundamentals, but I think we might have a chance to go down to that, 30 more points, all the way down to 992.75, and we have that demand zone. Why not? I think it has a great potential. Look at this. Obviously, I have no entry, so I'm not going to take it. How many micro for 50K account for NQ? Spencer, there is no simple answer to that, like 5 or 3 or whatever. It depends on your entry model. It depends on your levels that you're looking for. It depends on your strategy. Depends on the current market condition, the context of the market. Depends on your risk reward ratio. It's just hard to say, but I can tell you that if you're fairly new in trading, go with 1 or 2 micros maximum. We have Dave. I don't know if he's here in the chat, but he used to be on my streams. Who is doing the 1 micro challenge. He's doing really great. I can't wait to show his results here at MyFunded TV. An absolutely great challenge. So I would say go with 1 or 2 micro if you're fairly new. So that would be a potentially good idea. Any questions? No questions. All right. Do you think we can reach new low? Well, I think we can reach new lows. TT trading. I think we can reach a new low. I definitely. I'm not saying I'm bearish. I'm not saying I'm not calling out this level. But it's very interesting. It's so interesting how both the mini and the micro bounced here without mitigating that fair value gap below 992.75, and we still have that. We have a textbook 5-minute zone. Actually, I can show you this. So let's just go back to yesterday, and one of the reasons I'm showing this is to practice these levels. Okay, so let's just practice. That's why we're here. So look at this. One criteria is to have some sort of a liquidity sweep. This is not a fair value gap. I'm just showing this to get the idea. There was a gap right there. These bearish candles, even with the wick, they swept the liquidity from this fair value gap, okay? And you need a clean market structure shift. If it happens with an up close candle, not just a wick, it's even better. So first check mark, fair value gap, okay? Second check mark, market structure shift. And we need a strong impulsive move, which happened right here. And this impulsive move was so great, I mean, so good. The market never actually pulled back to like mitigate or tap this level again. So this makes it an absolutely valid level. The bullish candles have not traded below the bearish candles. This is great. Everything lines up perfectly. So if we go to the right, I just kind of like it. And of course, we had a 15-minute, look at right here. Just, for practicing, for, rinse and repeat, the routine. There was a swing point here. There was the sweep. There was no fair value gap, but there was a swing low. Bearish candle swept it. And then I know it was only like one tick. Or was it? Anyway, there was another swing point here. Bullish market structure shift higher. So boom, there you go. You have your 15-minute. And if you go to your 1 hour chart, let me just show you again, just for the example. This is the 1 hour chart right now. Bearish candles. And obviously I have too many stuff on the chart, but I know it's confusing. But here was the liquidity sweep on the 1 hour. Yesterday, the 4 p.m. candle, and then the same market structure shift pushing higher. So there is a 15-minute demand zone inside of a 1 hour demand zone, and the market took it out nicely. Now we left with one more 5-minute down there, and if we go back, it kind of looks like it wants to go. Look at this beautiful bearish engulfing. It's not a bearish engulfing, but a shifting structure to the downside again. I would say so far, the way these candles are looking, I mean, it looks good for a short. I'm not taking it. I'm good. I'm good for today. But I would say there's a high probability. The low-hanging fruit here would be not even the 5-minute demand zone. It would be like, oh yeah, I closed my quant hour. I was thinking to maybe take a very small position, but no. Yeah, I would go with 994, maybe on the micro. Okay. And if I would go with that, there would be my entry. TP with me right here. It's a risky one, but with a 1-to-1 risk reward, as I just said, the market goes up. I'm telling you, the market makers, that's why it's happening. The market makers are watching the stream. It's always because of that. All right. The market makers. All right, let's move on. So in the London session, we did not take a trade. We were actually sitting through the whole situation. Just a quick look on gold before I dive into some interesting topic for you guys. Yeah, so we were watching this 5-minute. Oh, yeah. In London session, I took a long position on gold. And it hit I closed it before hitting the stop. I was keep talking about the 5-minute supply zone up there. And as you can see, it has been perfectly taken completely. And so I jumped in on an inversion setup and I got, I closed down the trade manually and then look what happened. It went to the target. But on the other side, otherwise, I don't see anything. There was a nice 5-minute demand zone that got taken out, and that's all. All right. So enough of the zones. I think you guys get the picture, right? Of course you do. Any questions about this or anything else regarding risk management or zones or setups, entry model? Let me know. Oh, Raphael trades. I do have the note here. It says 4K gold this week or banned. Okay, I still have it. I still have it. I'm not going to look at it until Friday market close. We're not going to do anything. Don't worry, Rafael. I'm not looking at it. Only Friday, 4 p.m. or 5, whichever works. You know? But all right. So this was an interesting day. Obviously, this government shutdown thing can mix up the cards. So what about? It seems like that maybe even the NFP release is going to be postponed or something. What do you guys know about this? I haven't really checked the details. Go to daily, mark the top of the candles on the left. Go to after, see where it tapped. Go to the daily, mark the top of the candles on the left, and go to the 1 minute, 5 minute after, and see where it. Okay, we can do that. I'm going to do it on the mini, just for fun. Okay, so this is the daily. All right. Top of the candle. Top of the candles. Okay. Top of the candle yesterday is here. Okay. That's what you're saying. The body only. Okay. What's the opening is? Hold on. 843, right? What? Yeah, 843. All right, let's go with that. Why do I? Oh, it's not going to go there. No, that's what am I doing here? Not the opening, the close. I'm looking at the wrong chart. The close is 09.25. What am I doing? Okay, so here it is. And let's go to the 1 minute. Oh, yeah. I see it now. I see it. Look at the reaction here. Oh, that was yesterday. And now. So this was it. Okay. Beautiful. I like it. 2503. Well, yeah, it depends on. Yeah, I guess it depends. Maybe I looked at the wrong price there. When are we going to enter bear market? Yeah, 2022. Well, hopefully it's not going to happen that much. I don't want to see that kind of bear market. We can wait for a healthy pullback or correction. It's in the cards, but otherwise, I'm not in a trader age. I had, as I said, a nice short position earlier in the AM session. I'm good, right? There's so many ways, but is there a sneaky code happening? I don't know. Sneak. You guys want a sneaky code? So, yes. Okay, I don't know about this. Abhishek is Abhishek is doing it. Nice. So actually, again, I'm circling back to what Ash was saying about there's so many things and these so-called concepts, and it's not just about ICT or whatever. In today's world, we're basically talking about the same things, the same patterns, the same type of price action patterns that we're looking for when on what we're seeing when we're looking for something in the market. And I would say we can rebrand it and see it in many, many different ways, but we're all looking at the same stuff. So don't let yourself confused, right? It's always the same. But obviously, it's not just price action or not just smart money concepts, and it's not just these things. There are mechanical systems as well. I wanted to talk about this. There are mechanical systems, there are different type of concepts, and some traders actually swear by mechanical systems, or back-tested rules, specific entries, really to the details, everything, no thinking. And other traders live and die by price action, and I completely get it. I know. And in many, many cases, having a pure mechanical system can actually be good for someone who is dealing with the emotion problem a lot. If you have a detailed mechanical system, it could work out for you, because then you don't have to, you have to make much less decisions throughout the day. You just have to look for a specific set of rules to line up. I mean, the same goes on with price action trading as well, but it can be narrowed down to very detailed and specific entry rules. And that kind of helps you to take out the emotion from the whole concept, which is great. And this could be working out for those traders who are having, issues with the emotions or the proper emotional state when you sit down to trade, right? And there's nothing wrong with that. As I said, others like the supply and demand, or I don't know, reading the smart money concepts. Which one is better? The truth is, by the way, that both can work. All right. The real question is, which one is going to fit you? And that's what you need to find out on your own. That's why I like when Ash is also saying, like, you have to carve out your own way, and you have to. And I loved when he told me that it was a trial by fire on his end. Like that's the thing. Well, I was saying it yesterday. Like, you have to fail multiple times, a lot of times, and through those failures, you will find out what to do. Obviously, the F around find out rule. I don't want to say it, but something like that. You obviously need to fail to find out. That's how it works. Okay. It's not about which method is superior. It's about which method you can execute with discipline. And I think this is a very strong sentence here. It's about which method can you execute with discipline, because it's all about that. And I think the biggest advantage of a pure mechanical system is that you're really narrowing down every small detail: how to enter, when to enter, what's going to be your stop loss, maybe exactly in points, right? Specific numbers, specific, I don't know, if you're using an indicator set or whatever, specific set of rules. You know what I mean? Exactly. I know. So just saying, it can, what is happening? Are we going back to the fancy first presentation gap right now? It seems like we are. Look at this push here. Huh. Look at this push. I'm telling you, it's going back up there. 20 points. It's going to go there. I was fighting my way so hard to get there in the silver bullet hour. Like, I think I jumped into the trade around 10:15-ish. And now just look at it. It took me out, and now boom. It never happened to you guys, right? Yeah, lunchtime. Oh yeah, it's going to be, almost 12. That's going to be amazing. That's going to be real amazing. How's your goulash skills? It's excellent. I can tell you guys, my goulash skills are superior as well. I'm an expert, all right? I'm actually a magician. You're from India. Hey, welcome, Nitkum, sorry. Look at it. This is, I don't know, is this what in smart money terms called algorithmic push? I don't know, something like that. Context is king. Emma, welcome. Yeah, context is king. Look at this. I still feel like it wants to push it up there. Is that, I think, let's see, the high of this is, exactly at 100. How interesting is that? So 30 more points from here. Have you ever been to India? Never. I know someone, a friend of mine, who was in India, but I never. Midwest, you should see what we're doing. Oh, I trust me, I love all, I love food, and I would love to try out. I love to see what you guys do on a cookout, That would be great to see. Goulash was invented because they were hungry. Yeah. Hungry Hungarians, something like that. So anyway, As I was saying about the mechanical systems versus every other thing, price action concepts or whatever concepts you want to name it. As I was saying, both traders or both group of traders are right by using these different systems. I mean, mechanical system, usually we all know that. Any plans on visiting India near future? Best places? Okay, I will let you guys know because I really want to try out Indian food. They say I better be careful, but I want to try Indian food. That's for sure. Switzerland, yes, I was, but I most likely traveling through. Beautiful country, I love it. Yeah, spicy. I know that. So yeah, the mechanical systems, as you guys know, I never tried. I tried Indian food in Budapest, but it's not the same to go out. I mean, if I go out to India and try it there, right? But actually, it was so many years ago, I forgot what I was eating. But it was good, spicy. So again, rule-based systems, all right? I know, Abhishek, I know. Often indicators-driven is what I wanted to say. Mechanical systems, usually often indicators-driven. And a couple of weeks ago, I talked about this. Like there's nothing major, no major issue by having an indicator system, right? As long as you know how to manage Italy. I love Italy. Oh man, I was having my vacation in Italy. So as long as you're having a proper risk management setup for that mechanical system, it's good. I don't know. For example, I mean, you can have a moving average system. If X moving average crosses Y and RSI confirms the enter long, I don't know. There's so many examples to do this. And you know what? It actually removes the subjectivity, right? Less thinking, more following rules. Just saying, because we're seeing so many concepts, so many theories and legends and metaphors and methodical things and methodical people in the market. Like who knows? It's so methodical, these markets. But usually these are backtested, right? And these systems must be backtested very precisely, right? Very precisely. Mechanical systems, if you use a mechanical system, I strongly advise you need to do 3 times as much backtesting. And you really need to precisely do the backtesting, and not just for the past few weeks. You have to go back all the way like 2 years, 3 years, 5 years. You need to look even the weekly charts, the monthly charts. You need to understand during the backtesting the big picture, the higher context, to understand the seasonable tendencies of that period that you are backtesting. There's so many data you have to note down when you're going with a strictly mechanical system. I know you like Gogosi. What is that? That maybe I know. I don't know. I like every kind of food, I have a feeling that now that after this algorithmic move, it might be pushing back up there. So just saying. As I was saying, it has its pros and cons, right? Or I should say pros and challenges, because it removes a lot of emotion. In theory, of course, because if you're still doing the risk management, look at, as I'm telling you guys, the market makers are listening in. I just said it's going up and now it's going down. Before that, I said it's going down, it moved up. You know what? Let's backtest this. I think we can make some money here. Okay. So when I say it's going to go down, you just, you push the buy and the other way. No, I never heard about that, Raphael. I'm not going to walk into that street. I know where you're going. And by the way, have you guys liked the stream already? And make sure to share the stream link with everybody. You have socials. Everybody has socials. Just share the stream link. It's part of the process. Yeah, it is. It's Jamaican food. I didn't know that. It's a trap. I know it's a trap. I know. I almost fell into it. So again, oh my God. You guys are trolling me, which is cool. I like it. Excuse me. So it's removing the emotions, but only in theory, right? Also, if you have enough data, right? So let's assume you've done the back testing with your mechanical system. It's easy to test and replicate, but you need very strong and validated proof that the system has good results. Okay, so you should be able to replicate the same results. So you should be able to achieve similar results if applied by proper risk management as other traders using that specific mechanical system. That's why it's a different thing when you are seeing, for example, me or other hosts or other traders in social media, whatever, using all these different type of concepts and levels, different names, different theories, different stories, and whatever, because we all have a different understanding to it. And that's why I always say that because it works for someone, because I like the levels, I like to go with the demand and supply levels. It's definitely not. It's not a guarantee that it's going to work out for you, right? But I can't know. I don't worry. We're going to have a stream, and I'm going to be talking about only food, and we're going to do like. I don't know, a cooking show or something. I'm going to set up my streaming, setup in my kitchen. And while we're going to talk about the chart, I'm going to cook some food. How about that? That would be amazing, right? And of course, as I was saying, so to finish up that thought, so it's going to remove the emotion. Easy to replicate, easier, not easy, it's never easy, but it's going to be easier to replicate the results. And it's easier to follow up with your consistency because there's, you're going to follow those rules, and it's just a simple, set of rules that you need to do every single, like a repeatable system. That's why I'm saying if you have a system or a process or a routine during the chart time, and if you can repeat that every day, every session, let it be just a simple mechanical system, go with that. Just saying. Obviously, it has the challenges as well, as I was saying, like, yeah. I mean, I would say it's rigid. Sometimes misses the nuance of the context. So, a mechanical system, it has that unfortunate misleading thing that it's actually going to miss. It's going to show. It could be showing you totally different entries, opposite entries. You see the context, you might know what the market is doing, and your mechanical system is still going to show you opposite directions for the session or for the day. So that could be frustrating, and you could start second guessing yourself, especially when you try to understand the market context or the higher time frame analysis, which you should still do if you use a mechanical system, right? And you still, you're still overriding the rules. That's the problem, because emotions are also kicking in using a mechanical system, but you keep overriding the same rules. You keep overriding those rules. And once that happens, that's when it will fail very fast. That's the problem. Mechanical systems don't fail traders. In this case, traders fail to follow the system. Usually that's the problem. And that's the thing between or regarding to these mechanical system. But obviously we have the price action patterns or smart money concept trading and all that such, reading the row charts. That's what we do. trying to figure out what's going to happen. Supply, demand, liquidity areas, or liquidity grab. I know that before ICT came onto the stage, everybody was saying liquidity grab. I'm telling you guys, in 2021, 2020, 2019, 18, nobody was talking like liquidity sweep. Liquidity sweep as a word, sweep, was not even in existence in social media amongst traders. Everybody was saying liquidity grab. We're grabbing the liquidity. And since the ICT cult, it's being called liquidity sweep, which I don't care what's it called. It means the same, right? So it's really interesting. It's kind of like a social experiment, by the way. But anyway, we're going to roll with that, right? We're going to roll with that. So, yeah. So it's a different thing. Reading the row charts, absolutely, I understand. But it's also flexible, right? Context driven. And that's why I like it so much. It's context driven. And the main thing reading the row charts is that it adapts to conditions. And that's why all these theories, these concepts, these stories and methodical stuff came to existence in the marketplace, or not marketplace, in the trading niche, or in the trading space, whatever you want to call it. Tomorrow is your birthday, Kaizen. Happy birthday. That's all I can do for you. Giving away accounts is just, it's not my department. But I wish you a happy birthday for tomorrow, of course. So tomorrow you're excluded from trading. Yeah. So as I was saying with the row charts, we are waiting for displacements or mitigation, right? Liquidity sweep before an entry. Classic things, right? Bring methodical man. Yeah, I will. Oh, it also has the pros and the challenges. The pros, by the way, and also I get this question so many times, hey Tom, why don't you having more indicators on your chart? Why are you not reading the VWAP or the moving averages, which I do, by the way. The moving averages, I told you guys I'm testing it really. I think I would say, yeah. So I got this question why do you like the row charts more? Tom, you are not using VWAP or any. Yeah, so Nitkun, I use moving averages, but not actively during my day trading. I'm testing a system based on exponential moving averages in the past 14 months now, with fairly good results. But you know what I realized? I realized that, and this took me 14 months. And actually I can show, do you guys want to see how it looks like on my MetaTrader? You guys are going to think, I actually showed this a couple of weeks ago. I can show you guys on the screen. I realized that even using this system, this moving average approach, I still need to understand the context. I still need to do the higher time frame analysis. Do you guys want me to show it? Okay, let me put it here. Here's the indicator. This is based on MetaTrader. All right. So this is just a sneak peek. And as you can see, and this is which market is. This is gold. All right. This is gold. I'm not going to pull it off to the full screen, but this is a set of moving averages mixed with the zigzag and fractal indicator. It's custom coded for MetaTrader right now. And this system I'm testing since 14 months now, 14 months. But you know what I realized? I realized that I was not the one who came out with the colors. Okay. So it's not me who coded the colors. All right. So I realized that it's just not working perfectly without understanding the context, without understanding, without time and price, without doing the higher time frame analysis. So results are good, Trader H. I can say that I passed a couple of evaluation accounts purely by using this system. There was also, let's just say, I got some payouts also purely by using this system. All right. So also it has the, when the market is ranging, it has the issues, it has the problems. So I got to find out something because it's a trend following system basically. So I got to find out something to optimize it for ranging markets. I'm still working on this since months now, many months. So that's why I'm actually talking about the mechanical versus methodical systems. I can actually say this. But yeah, so the reason why I like the row charts is because it's going to give you a much deeper understanding. It was fun. It was fun. So it's giving you a much deeper understanding of why the market moves. And I just love to know it. So if you're purely using a mechanical system like this or whatever, mechanical system, did I say methodical system? Mechanical system. You're not going to understand what the market is really doing. And, I tried this many years ago and it just feels so good. I want to know. I want to have a narrative to understand why the market is doing this and that. I mean, we never know, but I want to build up a narrative in my analysis, like what is happening here? Why? Okay, there's a zone. It picked up liquidity. It bouncing back up there. Okay. So yesterday, I think it was yesterday when I showed you like this, it was absolutely great. Yesterday, the supply and demand zones were perfectly respected. I just love the way the price was moving in between those levels. And it actually kind of gave me a certain satisfaction to realize that, okay, now finally I understand why the market is at that certain price point. And that's why I'm saying, regardless of what we think about ICT or is it rebranded or not, I don't really care. I learned a lot from his lectures and from his videos. I like the market maker buy and sell model and the market maker premier course. I think that was the name of that. So, and I really enjoyed understanding why the market is doing what it does. But if you're going with the mechanical system, and especially when you're starting out in trading, your mind going to, how should I put this? Your mindset might going to ignore the need to know that information in the first place. So I failed a lot also with mechanical systems. I tried also RSI, TDI indicators, MACD, everything, moving averages. Needless to say, I burned a lot of money, and it was before prop firms. And I didn't have a context. I think if you ask me, like, I actually got this question too, like, what was the issue? What was the main problem besides poor risk management that you were burning money back in the years? So if some of you guys don't know, and I told this story and it's just a couple of seconds in short words, from 2018 up until the pandemic in 2020, I burned a lot of money in Forex. I tried Forex on a personal cash account, a Forex brokerage, and I was depositing money like $1,000, $3,000, $5,000, and it took me like 2 years. No prop firm for me back then. So I just kept depositing the money to my Forex account. And besides the poor risk management, the main problem, and I was using mechanical systems back then because I thought that I knew the market. I know everything. And the main problem was that I was not understanding the context. I wasn't even in the need to understand the context. I didn't care about the context. I said, who cares? I don't care about what context. What is context anyways? What is this? What is that? I don't know what it is. I just want to see the moving average cross and the RSI, go higher or whatever. And boom, I enter. I don't care what day it is. I don't care about, what the market is doing. I don't care about the higher time frame levels. I just want to see the moving average cross and I full port. No, not full port, but heavy position, and go in. And that was an issue. That was a problem. And I did this for 2 years. And by the end of those 2 years, I was actually miserable, absolutely, financially and mentally, absolutely on the ground. I was like, man, that's like, I almost throw in the towel. Like I was like, okay, that's it. I don't know what the heck is going on with this, but. And again, why I kept telling this and why I told you this, because if you want to go, Clint agreed, learn and read price action. Exactly, Clint. This is exactly the way. So there's nothing wrong with indicators. And it's kind of strange for me to say this because after those 2 years, and then when I restarted trading and relearn everything, I said, no more indicators, no more. But you know what? Once you understand the higher time frame structure, the levels, whatever that you're looking for, then it's time to incorporate those indicators that, I would say mechanical systems can also help you to put an extra layer of confluence on your entry, right? You can use it as that. But anyway, try to understand, even if you're using mechanical system, you need to understand big picture stuff, context, and all that such, right? Pre-market analysis also. Do your pre-market analysis even if you're using a mechanical system. That particular mechanical system is going to achieve much better results. Just saying. Okay. So as I said, the pros of the row charts, yes, understanding the market, why the market moves. It adapts to changes also, right? Trending, ranging, choppy days, you have the context. You can build up the narrative. And also, if you understand the higher time frame analysis, I know I always look handsome. Thank you. So it can also give you very good risk to reward opportunities. Now, maybe not the 1 to 10, but I would say, why not target the 1 to 2 risk to reward? I think that's a fair goal, right? But also it has the challenges. We also talked about that, like requires more screen time, by the way. Looking at the raw charts, it definitely requires more skill time. All right. I'm not talking about back testing right now. I'm mostly talking about forward testing. So skill time. All right. Number one, that's a challenge. All right. Skill time. I said skill time, screen time. I wanted to say screen time. I'm a little bit exhausted, by the way, to tell you the truth, because as I was trying to scalp my way on an evaluation account to that first fair value gap, it actually exhausted me too much, really. So, I see Abhishek is under pressure again. Okay. So a lot of screen time. Okay. That's a challenge, obviously. And I think it's also easy to overinterpret. Like it's easy to see setups that are not even there, right? Chat is blowing up like crazy. Nice. So the other problem is, as I was saying, like it's easy to see setups or patterns that are not even there. And it's also like, as I was just saying, trading on the row charts can also be more exhausting. And that's why you keep seeing like setups that are not even there. And that's why we can say that it includes more subjectivity, right? And it's easier to break the rules. So that's the challenge with the row charts. You break the rules easier. right? Seeing ghost trades or ghost setups, sorry, which are not even there. Okay. So I would say that, for example, price action isn't about predicting the market. It's about understanding the story. Okay. That's why I like price action trading. I don't know if I would say like I am a price action trader or whatnot, but I really do like this sentence. Like, congratulations to the winners, by the way. Congratulations. But I really do like that it helps me to understand the story. And I think it's a great thing that we were able to talk about this. And I hope you guys don't mind that I compared the mechanical systems again, with the row charts, because I think it's just important to talk about these things too, because there's so many things out there in social media. Need to understand. We need to understand it. Rocket Scooter fan, what's up? Oh, 3 more minutes. Okay, so I got to wrap it up real quick. Obviously, it has some more things to it. I had some ideas because it also has the psychological angle as well. Both mechanical and mechanical systems and the methodical systems, but the price action patterns or the row charts, right? The mechanical systems, like, best for traders who struggle with overthinking, right? If you can follow the rules, if you're very good in following the rules, and if you think that you would be you're still struggling with emotions, I love you too, everybody. You're still struggling with emotions, then mechanical system, why not? But super important, you need to understand the context. All right. So you still need to learn. Marry me. Okay. Yeah. So you still need to understand that. And if you're using the raw charts, price action or S&D, whatever concepts, best for traders who thrive in like dynamic thinking, you can stay patient and don't mind the uncertainty, because there's always some sort of uncertainty in the market, even if it's just lasting for an hour or I don't know, for the day, even for the week. But if you're patient enough, then go with the row charts, right? I'm gonna get ready. Yeah, sure. Oh, wow. Where's my here's my shade. Okay, I'm gonna get ready. Don't worry. So mechanical system will give you confidence. Price action will give you context. Okay, so both have some pros and challenges, but it's up to you. But whatever you do need to understand what the context is. So again, let me repeat that. Whatever. Oh, lights. Sorry. I got to be ready because Matt is going to be here in a second. We need to be ready for a party. So whatever you do, I just want to say it like you need to understand the big picture stuff, context and everything, right? Let's okay. All right. We're having a party. Is it happening? I invested a lot of money into this system. Yeah. It's much better. So we're ready. So again, I really did my best to go. I know. No dance right now, but next time we're gonna have a dance, that's for sure. So I hope you like this topic. I always like to dive into the mechanical systems versus like the row charts thingy concepts and everything. And I will go into this topic again next time. So it will be great. I just I like to compare these two things. And I hope you like the topic. I'm sorry if it was boring for someone, but if you're trading with a mechanical system, the takeaway is that you still need to do your market analysis. Just can't go over that. I wasted 2 years of my life and a lot of money by not even wanting to understand why the market is doing what it's doing. If you're purely looking for that certain indicator, that's the thing. So here's the man, Matt. Hey, welcome.
The song wasn't playing. That's my cue.
Hey, listen, we can still listen. Sing the Backstreet Boys song, whatever. I don't know, or we can do some rehearsing for next time.
Backstreet's back. All right.
Right. We can do that.
Yeah.
I was ready to party. I was ready to party again.
You had the lights turned on and everything.
Everything, yeah. What's going on? Welcome, Matt. How was your day?
It's been a winning streak continues, man. I know I keep telling people that I am due for a big loss at some point. I don't know, but this is like 20 days, I think, of something of just straight up win streak. It's been crazy. I longed out the door yesterday, right in the market open. And then I didn't get caught up in this. So I longed with market open, closed out, market dipped, and I grabbed this long right here, and that's all I've done. I took this one little scalp, like right here, I think, and then chilled out. It's been pretty easy. Straightforward. I think bull market with this big selling, it's more that volatility. I don't know. I can't really explain it. I'm a little nervous though. I don't think I'm going to touch the market for the rest of the day.
Yeah,
how about you? Tell me about your day.
Well, I had a beautiful short, as the market started to drop. I usually have my zones. So I had a level at 25,023. So I just jumped into a short, which was great. I copy traded. I know. It's dangerous, but I did copy trade a few accounts now. So I'm super happy. And I blew up an evaluation account as I was trying to scalp my way back up there. But it was already, it was due to a reset anyway. So I was just fooling around. But otherwise, on the funded accounts, I'm green. So it's all good. That's it. But, I don't know where this thing is going to go. What about this market shutdown thing? What about this NFP? There's going to be no NFP postponed, or what do you know?
I don't know. Like that's the thing. Like, where's the
market
data? Like, how are we going to get it? They can't just get like some intern to go in there and release it anyways, even though the government shut down. Like, just give us the data.
Yeah. Okay. Well, we'll see what's going to happen.
I honestly I don't remember. We've had shutdowns before, and I can't remember back in the day. They were so short term. I don't really remember what we did. Obviously, I don't know if people just show back up when things open back up. And like, by the way, here's the last 3 weeks of data. Not really sure how that works. So
yeah, we'll see.
Yeah, it's been a while.
All right, chat. I'm gonna say goodbye for now because actually I have an appointment, so I gotta run. So I have to be there. So I'm late already. So thank you so much, everybody. This was awesome. Thank you for the positive vibes. Thank you for the mods. This was great. And Matt, thanks again for the quick analysis. And I wish you a great session. And I'll see you tomorrow. Right? All right. Cheers, everybody. See you guys.
Guys, what's up? It's been an incredible trading, I'm telling you, month. And again, I don't know. I know I tell you guys I'm like the Iceman. I try to keep my feelings in check all the time. I'm just starting to feel the stress of not having a losing day in a while. It just seems kind of weird to say that, but I feel like my time is coming. And I know anytime I feel something, I should always kind of take it easy. But I have gone on big trading winning streaks before. Now, one time I did my small account challenge in 2020. And the longest winning streak I've ever been on was 70 days. And there are people here in this stream right now that were there and they witnessed it. It was one account. This is before prop firms were a thing. This is in 2020. One trading account. The account number was shown on the screen. One balance was tracked every single day. And for 70 days, I didn't lose a day for 70 straight days. That's 3.5 months, 20 days a month in trading. So that's the best I ever did. And that was in 2020. It was all on my YouTube channel back in the day. We were small back then, but it was incredible just to wake up every day and go to the market and just be like, okay, like today's the day, right? It always starts to wear you down. Now, I got to tell you guys an importance is a lesson to come out of this. There's no such thing as a winning streak. There's really no such thing as a losing streak either. This is random. And, you can actually take a winning streak and a losing streak and actually turn it into a non-random thing. Each day has nothing to do with the previous day unless you let it happen, and you can. If you let it get into your head, which I'm kind of demonstrating right now as an example, it can make you underperform because you're worrying about something you don't need to be worrying about. Statistically, yes, you should lose as a trader, but you shouldn't think like, well, because I won a lot, I'm destined to lose now, because you're just going to call it into existence and say, aha, look at this. I was right. Here it is. I lost. I knew it. But you're going to lose anyways all the time. It's part of trading. So get in the habit of, if you're in a losing streak, don't say that it's a streak. If you're in a winning streak, don't say that it's a streak. Don't even identify it as such. Just be like, tomorrow's Thursday. Tomorrow's Friday. Just be like, it's just a new day. Tomorrow's Friday. It doesn't matter if you've won 20 days or 200 days or 0 days or if you lost 20 days. If you go in there already feeling a certain way about how you assign all of these random events together and label it, you're going to underperform in general because you're adding a layer to your trading that you don't even need to add. Friday doesn't care about Thursday unless you carry Thursday over into Friday, which you don't want to do. So this is a rule of remember, as Tiger said in chat, yes, the trades don't remember. And therefore, you don't remember. The good rule of thumb I teach people also when I'm trading is that I come in here and look at the market when the market's open. And the minute 9:30 happens, I don't even look at the pre-market. I read what Rocket Scooter tells me in the morning, exactly in the morning, which is here. And I never look pre-market. I never look at daily charts, weekly charts, nothing. I don't care if it's all-time highs, all-time lows. The market doesn't remember either. Your trading doesn't remember. The market certainly doesn't remember. Every day is a new day, and I'm never scared to long if the setup's long, even if it's at all-time highs or all-time lows, it doesn't matter. I look at my setups and try not to remember what happened previously. And your trades kind of have the same thing. Appreciate all the dubs in chat, you guys. Thank y'all. Appreciate that. What's my longest losing streak? I would say that my longest losing streak in the history of trading has probably been no more than like 2 or 3 days. And that's even when I started. It's like losing streaks aren't really a thing either. You shouldn't really be losing 5, 10, 20 days in a row. You might feel like you are, but in reality, you should probably win every other day in general, because market goes up, market goes down. In a greater bull market, which we are right now, 70% of days are going to be green. If you just blindly long the market, you should at least win every other day, right? The only way people lose day after day after day is if you do inefficient things. Like you're basically not aligned with the trend. The market chops around and you're just chasing the bat. You can force yourself to lose from being inefficient. If you just randomly pick a side, whether it's long or shorting, you should, even if you're randomly shorting a bull market, you should at least win 1 out of 3 of those days. And 2 out of 3 of those days should go up and 1 should come down, kind of thing. Roughly 1 out of 3. So if you're losing 3, 4, 5, or 6 days in a row, it's just luck of the draw. It just happens. But also examine this. Market fell, and then maybe did you try to short at the bottom? And then you were wrong and you stopped out. So then you tried to long right there and you were wrong and you stopped out and it went lower lows. You're like, holy crap, I was right. It is going to crash. Let me go ahead and short there. And you got stopped out again. And then you tried the long and you got stopped out again, right? This might be some of you guys. Chase the short, chase the long, chase the short. So a lot of times if you're chasing trends, you're going to make yourself lose because that's inefficient. You should have shorted up here, not down here. Another thing is if you flip-flop when you're wrong, that'll also crush your efficiency. So to avoid losing streaks, I promise you this. Try to short at highs and try to buy at dips. That sounds pretty obvious, but try to get a strategy that lets you do that. Don't flip-flop if you're wrong. If you wanted to short and you were wrong, then be wrong and don't go the other way. Wait for the next short setup because you probably were right. Just get in sync with where you need to be shorting. I, after 15 years of trading, never, and I repeat, never, even to this day, flip-flop. Whatever I choose at the start of the day is my side. At the start of the day, it's falling. I say, great, I'm a bull today. I'm going to buy the dip and get out and buy the dip and get out and buy the dip and get out and just do whatever I can do and find dips to buy as a bull. Not, oh my God, I'm going to miss out on the big long opportunity and make all my money. No. Yeah, I might miss out on this. Okay, but this is $18,000 today. I made that here. That's it. And here. That's it. 40 points there. 40 points there. That's it. That's all I needed to do. I'd have to take every single move that happened. As a matter of fact, yesterday is very similar as well. I had a really big update yesterday, and I didn't even take most of the move. Most of my day yesterday was all in here. I longed from here to there and from there to there, and I was done for the day. And that was 20 grand. 24 grand, I think. That's it. And I didn't do any, I didn't find, even though it's the biggest run up we've had in the longest time, I was done for the day. I maxed out in profit in all my accounts. So you don't have to do everything. You don't have to chase everything. I don't flip flop when I'm wrong. And even this many years later, I find the side and I stick to it. All day it's rallying up, rallying up, rallying up. I'm not like, let me go ahead and short it because it must come down. It's just like, if it dips, I'll buy it. And if it doesn't, I'm okay with missing out. And even as I'm completing that sentence, talking about not chasing the long, we got some red candles. I'm a bull and I'm just waiting for some bull setups. I have some room to play still in these accounts. So where am I going to trade from? Well, I've got a good bull setup here and here. These would be great entries to take if I can get them. So anyways, that's your lesson for today. Don't flip flop. If you're trying to not be on a losing streak, flip flopping can add to the, to that, because you're forcing bad entries. Not a bad direction. You're just flipping your bias and then having inefficient. You're longing at the high and shorting at the low. And you're going to cause yourself to lose on a losing streak because your technique is actually just bad. And I tell people, like, as a joke, it's really hard to lose money in the market. It is. Here's an example. If you want to try this experiment on your own, please don't, but you could have a prop account. Go in there and just pick a random direction every day. Long or short, let it blow up or let it ride. You will realize if you went out of your way and did that exercise to pick one trade a day to try to lose that account and make it go to zero, you can't do it. Just like you can't force your account to go to infinity, the same logic applies. You can't push your account to zero. If you could control your account, like I can go in there and force my accounts. This is a logic experiment. So think about this. Like you have an account that you're trying to blow up on purpose. Try it. Pick one trade a day and try to guess the other side of the market and try to make yourself be wrong. That account won't go to zero. That account will probably make money too when you're trying to lose. It sounds weird, right? How's that possible? Well, if you could control taking your account to zero, then just do the opposite of that, and then it goes to infinity. Because you can't do the opposite of that, clearly you don't have the control on the winning side. How can you have the control on the losing side as well? The stock market's random. And I know somebody says, hold my beer. It's really funny. So how do you constantly lose money at the market then? This should be blowing your minds right now. How's it possible that you're constantly losing? Because you might be constantly losing. So why not just do the opposite of what you're doing? Because the opposite of what you're doing will also make you lose. Let me let you absorb that for a minute. You're going to lose in both cases. Remember, if I were to just pick a spot and randomly long the market or randomly short the market, it's going to either go up or down. So I'm going to win half the time, lose half the time. Overall, it should probably not do much to the account. Again, to repeat the other thing, if I had control and I could purposely take my account to zero systematically, then I can systematically just do the opposite and take it to infinity. Because none of us do that. It means none of us can do that either. It means it's impossible to control the randomness of the market or your account and the randomness of the market, picking one trade a day. So how is it that your account always goes to zero? Then can you just do the opposite of that? No, because you're not betting. It's not the odds of the market that takes you to zero. It's your approach. If you were to short here and long there and short there and long there, you will take an account to zero by chasing. Okay. If you do the opposite of that, well, longing there, shorting there, longing there, shorting there. That means you got to get the pinpoint accuracy. The reason originally when you got it wrong and you were chasing is because emotions are what got you into those trades. Your fear of missing out, okay? So you can't do the opposite of emotions because the opposite of emotions is just more emotions. Longing here and shorting there and longing there and shorting there is not the same emotion. Remember, if I short at the bottom and I lose and I flip flop and go to the long, this is a panic move. Oh crap, I was wrong. Okay, let me go long. I don't want to miss out. You can't do the opposite of that. The opposite of that is having a pure working system. I bought at the dip and short at the high. This is emotionless. This is Iceman. This is no feelings at all. So the reason you can't just do the opposite of your current blow up situation is because you're stuck in what I call the emotional spiral. When your trades are based on emotions like that, you can't do the opposite and turn your money into infinite growth. This is a mind-blowing lesson. I teach this in my boot camp, by the way. You can't just do the opposite and that turn into a profitable strategy. Because the opposite of emotion, the way you do it, is some other emotion. Instead, you need the real opposite of emotion, which is strategy. Okay. You need a strategy. And so you can't really just do the opposite of emotion and then somehow a strategy emerges. That doesn't happen. Let me just trade emotionless and then maybe a strategy will emerge from that, right? The answer is that doesn't happen either. So these are two separate events. If you're stuck in an emotional spiral, there's no way out. You have to learn how to not have those emotions when you trade. Anyways, point I'm saying is if you're trying to figure out how to blow up your account on purpose, just flip-flop your trades a lot. Every time you're wrong, go the opposite direction. And you will drive that account to zero. So how do you not drive your account to zero? Do the opposite. Every time you're wrong, don't flip-flop your account in the opposite direction. Just be wrong and be okay with it. And you will realize that with that thought experiment is you'll probably make money even if you get the market wrong half the time. But you're going to start making your trades bad if you jump on the other side of the trade and flip-flop. The easiest lesson, and people praise our boot camp the most, is they learned that I teach you don't ever flip-flop your trades. If you're wrong, be wrong and be cool with it. This is a masterclass lesson in the psychological part of trading. So the opposite of having inefficient entries and blowing up your account is to not flip-flop when you're wrong. Just learn to be wrong and wait for the next setup. Today I'm long, waiting for longs, waiting for longs, waiting for longs, waiting for longs, and that's it. Market looks like it's going to sell off. Okay, where's my next long opportunity? I could just also do the same thing as a bear. Short, cover, short, cover, short, cover. Where's the next short, right? And so whatever you're doing, wait for the setup. And if it proves you wrong and you stop out, wait for the next one. Don't chase on being efficient. That is how you own a losing streak. Or the reason I don't go on losing streaks any more than I go on winning streaks, I'm just in a lucky 20-day thing right now. But winning streaks are rare. But why is it that I don't have 20-day losing streaks even though I have 20-day winning streaks? Because I have some control there. I'm not inefficient in my trading. As a matter of fact, I'm very efficient in my trading. So I'm more likely to go on a winning streak than a losing streak. I'm more likely to have a longer winning streak than a losing streak. It's not 50-50 when you have control because the market goes up 70% of days and I'm mostly bullish. So it's more likely that I will have a win streak with that approach or a longer win streak if I do have one, that I will have a losing streak. And I'm certainly not going to have a longer losing streak than a winning streak just because I'm on the right side of the trend most of the time. And I'm not flip-flopping. So statistically, I'm never really trading against the herd more often than I'm trading with the herd. I'm mostly trading with the trend. So statistically, I should have more frequent winning streaks, even though streaks aren't a real thing. But statistically, I should have more winning days than losing days because I'm on the right side of the market most of the time. And so you never see me, okay, I'm longing, done. Okay, let me short it now, right? It's like if I'm a bear, I'm like, okay, let me short it, let me short it, let me short it, let me short it. Very rarely in bear markets will I take a short and then take a long at a bottom. Sometimes I'll do both trades in a day, but it's not flip-flopping when I'm wrong. When you're wrong and you flip-flop to the other side of the trade is a recipe for driving your account to zero. I promise you that. If you guys are like, holy shit, I do that, and yeah, I don't make money. Try this as a new approach. Again, I can't give you investment advice, but try this as an approach. As an approach, try to learn to stick to whatever side you picked and stick to it all day. Even if the side you picked was wrong, like you try to long the market and it dies and the market's dead and you have that itch to jump in on the short, just don't. Do you have another long opportunity? No. Okay, just watch it. Watch it and sit out and have that control. Because winning streaks come from having control in general, not from beating the market more often than I don't. I just have really good control. And the market, I didn't like the long. My resilience indicator was not giving me a good long signal, so I didn't take the long. And then I waited, and then I waited, and I didn't buy the dip, and didn't buy the dip. And then I waited for an hour and a half, and the first trade I made was here on the penny, and that was worth $6,000 in 6 minutes. Imagine what control can do. I know it's boring to sit there with that itch to do something, but the only trade that I made on stream was here. That's it. And I was in and out in 6 minutes. Didn't stress, didn't feel, didn't jump early. This green candle didn't bait me. This green candle didn't bait me. And imagine if you were trying to long and then you took a hit, then finally you decided to short there, and then you're upside down again. You get in that spiral, and then it starts to hurt you pretty bad. Somebody says, what is my win rate? Well, let me log in and show you. Let me take a screenshot of it. Give me a second. This is with another prop firm that's on MyFundedFutures. I've been trading forever. This is over the course of what's February to now? February to now. I just copied this from the trade journal. You guys might be able to tell who that is, even though we're not going to mention who that is. I was always trading them anyways before I joined MyFundedTV, but this is my win rate for the year. Pretty good, right? Mostly from control, and mostly from not flip-flopping, and mostly finding the trend. So you'll see that 75%. That's over thousands of trades. Yeah. I'm slightly different than most traders. I have an actual market edge. I have setups that work 90% of the time. When they work, I wait for them. And I tend to win 3 out of 4 trades. Most of that comes from not flip-flopping when I'm wrong. It's taking a loss and being wrong. That is the easiest way to get your win rate up, guys. You want to know the trick to get your win rate up? Literally be wrong and be okay with it. Your win rate will start going up if you stop being inefficient in your trading. Don't be wrong and jump in on the other side. That's going to bite you in the ass more often than you not. Now, again, if you long the market and it looks like a sell-off thing, you jump in and made all the money, great. But most of the time, the market will chop, and that flip-floppy mentality will just blow you up in a single day. Trust me, I know. Choppy days are when my affiliate code is used the most. Not crash days, not sell-off days, not people on the wrong side of the market. When a day does this all day, dude, my code use goes through the roof. People literally go crazy and flip-flopping, and that's where people lose the most. So learn to pick a side, stay on the right side, and don't get squeezed out. And jump the other way. Rule number 1. Rule number 2 is I actually have an edge and I wait for it. So I don't just chase the market. I'm not doing anything right now either. I'm not chasing the market thinking I'm missing out on something. I wait for the setup that I want. Here's the setup that I want today. I'm either going to get it and be right or get it and be wrong, and then that's it. I want to trade either from here or from here, and that's it. I'm going to wait for this and do nothing else in between. Everyone that's chased this breakout has gotten squeezed twice in a row. Hey, maybe this breakout might be the one that pays out. You might be very negative and finally do all this work to break even. Me, waiting for something I know works for me. And now the waiting part is what gets your win rate up higher as well. Let me read some of the comments you guys have. But yeah, that's their lesson for the day. How to get your win rate up. Now, win rate isn't a key to profitability. Don't let me tell you that a high win rate's necessary to make money as a trader. It's not. It's actually rare. The only time you have a high win rate is if you actually have an actual edge in the market. An edge in the market is extremely rare. Even profitable traders don't have an edge in the market. Now, that comment may shock you, but that's definitely the truth. I know a ton of profitable traders that win 30 or 40% of their trades. Yeah. It's not common to have a market edge. You have something that just works more often than doesn't. It's a rarer thing. Lucky for me, that edge carries me as a trader. But in reality, the profitability comes from control of your position. Somebody says JCap has 30%. Yeah, it doesn't surprise me. It's actually pretty average to have 30, 40% and still make a fortune as a trader. Pretty normal. Because not everybody has just have that edge that works. Not everybody finds an edge. But what they are good at is controlling their wins when they're losing. If you have a losing rate that's higher than your winning rate, then it just means you win bigger than you lose. And therefore, you have to take 2-to-1 and 3-to-1 trades to make up for the loss. Me, I make a career out of 1-to-1 trades. And I know that sounds very weird and coin flippy, but almost all of my trades are 1-to-1. Vast majority of them. But they're so highly likely that I let the win rate carry the strategy. Therefore, I can take less risk in the trade. And therefore, I have less loss and more control. But you can only do that if you have a good edge in the market, which is rare. Gamma exposure exploit that I have is a very strong high volume pivot. The strongest high volume pivot there is. So I consider it an edge. Yeah, so that somebody said with a lower win rate, you hold for longer for larger gains. So an example is if you have a 30% win rate, let's say 33, you lose 2 trades for every 1 trade that you win. Okay. So the 1 trade that you win has to be at least 2-to-1 to make up for the 2 that you lost. So you need to get a 2-to-1 trade every time you win for every 1 that you lose twice just to break even. So you need to get 2, 2.5, 3-to-1 trades to make a profit. And a lot of times breakout traders can do that with a lower win rate. It's harder to predict a breakout, but when you're right, you let it ride. That's an absolutely okay strategy, and a lot of people do that. Someone like me, I have a different approach. I'm in and I'm out quick, and I get smaller base hit trades, more like 1-to-1s, but a 1-to-1 that actually wins 9 out of 10 times. So the profit is small, but it's in chunks. And when I lose, the loss is also small. But the idea is the edge carries strategy. Therefore, I don't lose on large losing streaks to bring the average down. And my losses are always small. When I take a screenshot and show you guys my trades, you never see the red days any more than $2,000 an account. You don't see $5,000, $10,000, $20,000 losses in those accounts. I actually have it hard coded in my Tradeovate that once I lose a certain amount, it doesn't let me trade for the day. So I even refuse to let myself lose more than the allowance. Most of the accounts is 2,000. Some of them I allow 4. And once I lose, I'm out. I'm okay. Yeah, so 1-to-1 base hits, as long as you win more than you lose. So again, the rare case is that you win more than you lose. You don't need to take a lot of risk and reward. And you don't need to be in the market for a long period of time either. You get your win, you get out. One of my trades was 6 minutes long for 40 points. And again, I don't have to go for the last 100 points of the move. I'm finished quick. And what that serves me is that I'm not in the move and having to stress out all day, hoping something happens. I'm also not in the move if Donald Trump decides to go on a tweeting frenzy and crash the market in the middle of my holding it for 3 hours and I get a heartbreak in 2 seconds. I'm in, I'm out quick, and I get to avoid the noise in the news. Yeah. Somebody said, what do I think of the new scale accounts? Oh, I think new scale accounts are amazing. I mean, trading 5 days to get a $6,000 payout, half of a $12,000 payout. There's a certain other prop firm and TV show that likes to go out there and brag that they're the best and they're the best with their $5,000 payout every 5 days. How about $6,000 here? How about no activation fees here in that other place? We don't like to talk about the one with the 18-year-old gurus on the TV show that just graduated high school. Listen, that's an activation fee on top of it. Let's just say who the number 1 in town is. MyFundedFutures, baby. You know it. We are the best. We've always been the best, dude. 100%. So anyways, let's just be real with that. $6,000, dude. I mean, look, if you think about it, add the activation fee in, add the other stuff, it's more money on the other side of the fence. You got to add it all up. So yeah, MFF, super, 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 super roll. Yeah, we roll. We're the best. I think that's amazing. I know it's limited time, but heck, man, that's like the best time to jump in and give it a shot if you've never tried it out before. Somebody said this is the best F and prop firm they've been with for a while. Heck yeah, dude. I really enjoy it. I'll tell you, when I came on the show, obviously, being a streamer, I got 4 TV show offers, by the way. I got 4. And I chose MyFunded because they're the best. I said, I want to work for the best. I want to be with the best. I'm going to sit with the best. That's it. So the reason I'm here, out of all the other ones, this is where I picked. I want to be with you guys. I want to hang out with you fine folks. What was the quote from the what was it from Titanic where he's like, oh, life is great. He's like, just just the other day I was sleeping in the sewers with the rats, and now I'm here having dinner with you fine folks. And they were like, to Jack. So anyways, I love hanging out here, and you guys are the best. And this is the best prop firm, 100%. Yeah, great community for education. Yeah, and then I get to annoy you guys for an hour on top of it. So anyways, I like to say this is the best show as well. Life is a series of bets. Oh yeah. That was the speech where he was talking about how he won the seat in the Titanic in a card game. Yeah. Okay, so anyways, you guys understand the flip-flopping thing? If you're looking to make changes in your strategy, people always say, trading, you evolve in micro changes, like small changes. Yes and no, do I agree? Like, you will modify yourself emotionally in small steps. Like, you'll get better emotionally in baby steps. There's no way you're going to make a leap in your emotional game. Over time, you get hardened. Like, it's kind of like, it's going to sound really morbid, but you have a death in your family, right? It's going to hurt. And then another death and another death and another death. Like, maybe you just have bad luck in the family. And each time it happens, you sort of like cope with death better, and it doesn't hurt you as much. I know it sounds morbid. Maybe it does. For some people, it doesn't. Right? If something tragic that happens, you sort of get hardened to it. They call it combat hardening in the military. You get used to like the risks, you get used to the pain, and you get over it much quicker. Trading sort of hardens you in that way. The bigger the losses and the more losses you have, over time, you gradually cope with it better and faster. So that's where, you make incremental changes in life. But I'm going to tell you, when it comes to a trading strategy, nobody incrementally gets themselves to become a winning trader on the strategy wise. It's made in giant steps. You got to make a big change and change something that's really hurting you. And the big step is like, okay, try something completely different. Okay, well, let me try something this next couple of weeks. When I lose, let me just be wrong and not jump in on the other side of the trade. Let me paper trade that for a while. Let me see if it improves oh, good, it is improving. Okay, let me add this to my strategy boat and or my toolkit, like the things I'm working with. And like, try different things. And I tell people there's certain times we use the VIX to say these are times to sit out. Maybe apply a sit out strategy. If XYZ happens, I'm going to sit out for the day. That's a leap. That's not a small baby step. And you're going to basically I try to say, imagine if you try and become a carpenter and somebody says, nail these boards together. That's your job. And you go out and buy a hammer and you're hammering it. And somebody says, okay, well, I need you to saw in half. You're like, I don't think this thing saws in half. Let me go get a different tool. And so you go get the tool that you need and you're tackling one problem at a time. So you're making like bigger steps in strategy, but smaller steps in emotions. And I feel like a lot of gurus teach this, like trading is going to evolve in slow steps. Just stick with the process. Is bullshit. You know why? Because they want you to keep paying your monthly sub. Incremental steps. It's going to take you years to learn the strategy. It doesn't. It takes you 2 weeks to learn a strategy at most. It takes you years to emotionally tailor yourself to trading. But don't buy into the idea that you're going to make baby steps in a strategy and that you're going to somehow, fine tune your approach to go from non-profitable to profitable. Emotionally, yes. Strategy, no. Strategy, you're going to make a leap and land on something that's like, oh, this kind of fits my style. Okay. And then you're going to fine tune from there. Okay. I have a bunch of long and short setups. Let me remove a couple of them to not take those because my win rate was lower. Ooh, my win rate went up. Okay, cool. Eliminating that big thing was a big step in progress. And so strategy, you're going to make bigger steps. That makes sense. If your strategy is not working, don't just be like, well, let me stick with it like another year and see if it works. Let me pay this guru another year and see if the strategy finally kicks in. If it's not working, what I've learned in my career is to abandon something pretty quick and try something new. Because something just needs to latch on with your style and your personality. And yeah, it'll take some time to get acclimated with it, maybe a month or two. But if something's not working for you, 3 months, 6 months in, like a bad trade, cut your loss. Don't bag hold a bad setup system style either. Try different things until something sticks. And if something feels good for you, then that's a good place to start. Like, it matches your personality. Like me, I hate being in a trade for 2-3 hours a day. It makes me so nervous. I'm sitting here with my heart rate up. I'd rather just be in and out quick. I'm an impatient person. I'd hate to wait for it. Okay, then let me try a strategy that matches my personality better and make some leaps until I find it. I find that to be the best approach for traders. And again, that's just my opinion. Take it or leave it. You used to be terrified of blowing an account, which made you trade way too small, but now you have better position sizing after realizing how cheap the accounts are for the reward you can make. Right? So as Mark has said, he's discovered something in the psychology of like how he was behaving, realizing that the risk is so low when the accounts are cheap that you don't feel anything when you blow up because you more accept it because they're cheap. Doesn't mean he doesn't lose a lot, right? Please make a short clip about what I said about gurus you want to share with other people. Yeah, I call it like dangling the carrot, right? When the guru is like, oh, don't worry, man. Trust me, every time the candle goes down, every 3 red candles, just buy the next 2 green candles sort of thing. That's literally the step. You can, after 5 or 10 times of using it, you can see if there's an edge there. And if there's no edge there, they like to dangle the carrot and say, well, just stick with it, man. You'll get it. Eventually you'll get it. Instead of you just seeing it and being like, no, I don't get it. This does not help me. My win rate is not any better. The strategy is not helping me any further. So I learned to just cut ties quick with things in general. Yeah. So remember, a strategy is very easy after now again, a small amount of data points doesn't make a trend, but if you try something and it's just not lining you up with the market, and you're losing like 5, 6, 7 trades in a row, it probably just doesn't match you. Or it probably is you probably got scammed. How do you deal with feeling a bit off emotionally, but the market's conditions seem to be better than average? Size down. My rule is if you feel off, don't trade, period. But if you feel off and the market still gives you a good signal and you're like, I got to trade, then the easiest thing is to not exacerbate those emotions by trading big with a lot of risk. That'll make those emotions make you feel even worse. So if you feel anything, size down, if not size down to 0, but at least size down. And I mean size down big, like a fraction. If you feel off, but the conditions are still good and you're like, okay, I'm going to trade this. You normally will trade 2 micros instead, 2 minis, sorry, trade 2 micros. Trade, I mean like a 10th of the position. That way, if you lose, you're like, dude, it was only a couple $100 instead of a couple thousand, because the emotions will allow you to take a big loss and spiral it bigger. So I'm talking like trade pennies instead of dollars. If you feel any sort of way, that's the day you trim to like the tiniest amount. Yeah. I usually tell people if you start to feel something, sit out, because the feelings will spiral out of control. And that's a good answer. Yeah. You passed an account when you won 4 days with awesome stats. You flipped the switch to live sim, nothing but losses. Well, another thing is that when it comes to prop firms, there's an unfortunate downside to the eval portion transitioning to sim. The downside is the pressure's on. Same thing could be said that, you're an actor and you're in a play and all the rehearsals you did fine. But once the curtain comes up and the lights are down, you have an audience full of people, your nerves kick in, right? And you may perform worse because now the pressure's on. And that is the unfortunate part of the prop industry, is that you're going to have another hurdle to get over. It's that you're going to practice. And then once you get on the actual game, you got another emotional hurdle to get over. Now, as somebody had mentioned, when you get to the sim funded side, especially in MyFundedFutures, it actually becomes easier to pass because you don't have consistency, for instance, when funded like you do when eval. So the rules actually get even easier to kind of help that, but it's the emotional part of the pressure's on. And you just gotta have to keep practicing. You have to get used to treating it like it's no different than the days before. And also it could just be bad luck too, yeah. It's like a personal trainer who has long-term clients. How come they haven't either hit their goal or got to the point where they can self-maintain? Yeah, exactly. The personal trainer's job is to train you. Their job isn't to get you to their goal. Their job is to pay themselves a salary by training you. And if you get to your goals, it's only you that gets to your goal, not them. They're not a bad trainer if you don't get to your goals. You're just a bad student. Yeah. Or their training style just doesn't work for your goals. Correct. Yeah. How's VIX looking? It's still above contango midpoint. So VIX is still in the weirdness today. 1718 is the magic number, and VIX is still above it. So spontaneous volatility can happen. That's also why I avoided the long at the open. I still walked in after that big up night saying, oh man, the VIX is still where it is. Volatility can happen. I'm going to sit out at the open and just see what happens. There's a big gap up, and all of a sudden it just filled the gap, which was a brilliant thought. VIX is the only thing that kept me longing me from the open. I actually said on my stream, I feel weird about today. It's gapping up very heavily, and resilience is only like 10 and 20. That's not even that good. And like 30. Oh, that's kind of bad. And volatility can happen. Let me just sit out. Like VIX popped to 40 and then immediately started dropping at the S&P to like 8 and 7 and 6, like right up here. I was like, that's not good enough to chase that long there. And I set out. You know, VIX is a great tool, man. VIX futures. That trick I teach you guys. Oh, yeah, it's banger. What is the resilience calculation? Okay. So I'll tell you how the sauce works in resilience. This is okay, I've got 20 minutes. It's enough time. Okay, so let me tell you. Let me open up a stock really quick. Let's pop up. Oh crap, hold on one second. I have to relog into my platform. Always likes to kick me out. Let me log in. Hold on. It's so weird. Okay, let's launch it. Let me reopen it. Always likes to kick me out at noon. It's just my brow. I don't know. It's such an expired. Maybe my token just expired. Who knows? That's what that means. I probably haven't logged out in a while. It's probably why. Okay, let's try this one more time. Let's open up Invid off to the right. Okay. So let's talk about stocks, right? And you guys will know, for all general purposes of every single trading day, the open is always high volume. You can see there's volume all the way to there. And the close of the previous day is always high volume as well. You can see that pretty clearly in futures. There's always the equities open, and again, you can see in futures. Let's go to the open, right? Let me just move the candles that way. Here's the open, here's the close. There's always high volume, right? We see that? High volume means liquidity, okay? So at the open and close, there's always volume, therefore is liquidity. So let's mark it on the chart. There's an L here and an L here. Great. Open and close is very liquid. As a matter of fact, open and close are some of your best intraday volume pivots. Let me make this a little bigger so y'all can see it, right? When you tap the open, there's volume. When you tap the close, there's likely volume. Here's NVIDIA. When you tap the open, do we all see volume there, class? Yes, volume, volume, volume at the open. Great. So we've established that the open is a great pivot and the close is a great pivot. Perfect. They're both liquid spots. All right. So let's establish one more thing. What liquidity is. Liquidity means increased frequency of transactions. It just means the more trades that will happen. Something that's very liquid. You and I are willing to trade to each other very fluid-like, very liquid-like. If it's not liquid, then we disagree, maybe at the price or the timing of our entries. So the more liquid it is, faster the trades happen. Okay. Means there's more volume, and that volume is going to be buyers and sellers. So let's put a B and an S. Means there's a lot of buyers here and the sellers there, and there's also a lot of buyers and sellers there. We've already established. And also what's something that's neat is in between two liquid places, the middle is actually extra liquid. It makes sense. If you and I can agree, there's a bunch of buyers and sellers there, and there's a bunch of buyers and sellers there. Well, anywhere in the middle, there's also a bunch of buyers and sellers, because that's typically it. And exactly at the middle is going to be kind of like your biggest average of where all your buyers and sellers will be. You average it out, the middle is going to be extra liquid. So now we've got three really strong pivots. So far, so good. Open, close, and half gap. We call it half gap, the halfway point between the open and close. 9:30 open in equities, 4 p.m. close in equities. Here's the middle. Okay. So one thing is, you have a postulate, which is what we call undeniable truth in physics. We call it our postulates, or or like something that you can't disprove, but let's just say it's an assumption for now. Number one, the assumption is we found some liquid spots here, here, here. Number two, the assumption is markets go up when dealers are looking for sellers. Markets go down when dealers are looking for buyers. An example, if I'm buying a ton of shares, then the dealer is going to raise the price to attract sellers to the mix. Makes sense. If somebody's selling a bunch of shares and then there are buyers, how do you find the buyers? Well, there's a lot of selling pressure. Therefore, the bulls are going to want to get in lower. So they're going to lower price. So this is part number two of resilience. When market goes up, it's looking for sellers. When it goes down, it's looking for buyers. Okay. So if we start at the middle, like NVIDIA, for example, if NVIDIA is going up just from the middle, then we assume, well, it's looking for sellers. And if we were to take a guess where the sellers are going to be, then we can say, aha, NVIDIA is here right now. And if it's moving up from the middle, then it's looking for sellers. Where will they be? Well, this is the best guess because there's a ton of sellers there. So what resilience exploits these two principles together. And what happens is we look at all 500 companies in the S&P together. We also have one for NASDAQ. We ask the following question. Is a stock like NVIDIA on this side of the half gap or that side of the half gap? If every stock, and then we weigh it by market cap and we add it up and we do a couple more relationships, but basically if every stock is exactly at the middle, resilience will be 0. If just one company like NVIDIA just moves right off of the edge and everything else is at 0, resilience will be 100. If NVIDIA moves down here and all stocks are at 0, then it's at negative 100. What we do is we look at every stock in the index, whether it's above or below the half gap and inside the box. We make that assumption. Right now, with resilience being negative, it means the majority of stocks are on this side of the gap and likely to trade towards the close of yesterday's session rather than gap and go. So with the negative resilience, it's very likely that the index that is following the stock, which is assumption number 3, the index is following the stock market. So if the stocks are mostly in this side of the box, then the index that gaps up at the top is most likely to end up at this side of the box as well. It's designed as a gap fill predictor. The final part of resilience is it's looking at the relationship between what the actual index value is, or the contract value is. In this instance, we use QQQ and we convert it to NASDAQ, or we use SPY and convert it to ES. But basically, we're looking at the value of that instrument where it's trading relative to where the stocks are. And if the index is up here and the stocks are down here, then resilience will be treated as a negative value. The genius part behind the indicator is it does the following thing. If NVIDIA is trading right here, the algorithm asks one more question. Yes, NVIDIA's value is 189.12, but actually, if NVIDIA were to complete its destiny and go here, then the actual value is 189.6. Okay, so that's slightly higher in value. Therefore, if you were to like snap your fingers and every stock up here goes to open and every stock down here goes to close, the S&P should have a new theoretical value. We call it the implied value. So we compare that implied value to the S&P's current value. If the current value is under or over the implied value, resilience will be above or below 0. So that implied value is what allows resilience to be a leading indicator because it's guessing where the market's going to go. It's one of the only technical indicators I created it, by the way. It's only ones I've ever seen that makes an implication to imply the future. It's actually trading, you're actually trading the arbitrage of the index tracking the stocks underneath it, and then implying the value of the stocks. Right now, NVIDIA is telling us it can potentially be slightly higher. If I pop on another stock, right now, Meta out of the box. Doesn't count. Tesla, below the box. Well, it counts, but it's not changing anything. Tesla is down here. So as you see at any given time, resilience is looking at all the stocks together in one gulp. And it's a leading indicator. And I designed it myself. Thank you. The idea was if the stocks are gapping up and fading halfway, in the middle, I need a tiebreaker. So if most of the stocks are fading their gap, then the index is not likely to keep going. It was just sort of like a stroke of genius to think like that. And actually, most of Rock Scooter's tools are designed in that capacity to be leading indicators. It's using math to lead off the market. As you see, resilience is negative. This white line is negative. I'll talk about the blue and yellow one in a second. And because it's negative, the algo actually tells me the half gap is resistance. And oh, look, all day long, it's not breaking the halfway point. Isn't that cool? Pretty neat, right? So I designed that tool myself, and that's one of like Rocket Scooter's 15. We call it like our cool tool set. It's cool. It's different, right? It's a different way to see the market. And as you see, S&P opened up, and within minutes, this white resilience number here, within minutes went negative. It literally at 8:39, it went negative. So right about here, at this moment in time here, we saw that it was going negative. So therefore, S&P just beeline to fill its gap, right? Y'all like this? Pretty cool. So we do that same aggregate as a tiebreaker at hedge pressures as well, and we look at the stocks in the same capacity. So it allows me to have confluence with the algo. An example is right now, it's telling me all of this gap is resistance. So I'm not super excited to chase longs, so I'm not getting squeezed out of chasing longs. I'm buying dips only, but only trading them very small bites because I know it's hitting resistance on the way up. That's why I'm in and out. That's it. I'm not holding for a big run up. A lot of people are getting squeezed by holding for a run up when I've got indication that the stocks aren't moving. So if we were to fall to here, I can make that same judgment call. Are stocks breaking monthly hedge pressure or not? And currently right now they're holding. S&P also positive, which is why all morning when I first came in, I have the word A+ sitting there, because if this market were to nosedive to monthly hedge pressure, I'm more likely to bet that it stays because stocks are not in gamma negative territory. It's the same kind of mode as resilience, just doing it at a different place. Yeah. Pretty cool. That's the 10-minute explanation. But the idea that we look at the implied value of the index and compare it to the current value allows it to be a leading indicator estimate. And more often than not, in a rational market, resilience is a leading indicator. It can sometimes give you a signal an hour in advance. Again, markets are random. The index doesn't necessarily have to track the stocks exactly. They can deviate from each other. And so sometimes resilience doesn't have that much of a lead off, but is a very strong solid. Like today wasn't as much of a lead off as it could have been, but exactly right here, which is exactly right here, you got the signal that the market was dying. So say that if I decide the long at the open and it does this and does that, and it's starting to look good, and this candle right here, I got my get the F out of the way signal exactly there. Like, shit, I'm going to lose another 14 points. Let me get out of the way. And all of a sudden, I get out of the way. And another thing is that when it does fall and these green candles come through here, I'm not chasing these like a numbskull because res is negative. I know the best it's going to do is hit that resistance for the most part. You see how textbook this was today. I designed resilience to help me that age-old question, do I long at the open or not? And as a bull, it's almost necessary to learn how to long at the open, because long at the open is usually where the bull trade starts. And it's a hard thing to do, but I designed this to help me with that one decision. Do I long at the open or not? Thank you for the explanation. Yeah, you're welcome. So whoever asked the question, do y'all think resilience is cool? Do y'all like that? My job was, as a trader for myself, was to design things that match the way I see the market. And instead of adopting what other people tell me the market should do, I sort of was like, let me take a more mathematical approach. An index is tracking stocks. Market goes down, look for buyers, and open and closes liquidity. And I go, I can kind of create a tool out of this, right? These are things that everyone here agrees with, right? So it's consistent. And the idea is that, well, are there clever ways to use market data in different capacities? So, am I shorting half gap because it's resistance? Aha, good question. One can, right? The odds of half gap resistance being a good place to short from, we roughly say 60-40 when it's agreeance. So we call this the B setup because remember, the stock market is random, but about 60% of the time it's got a good lead off. And therefore, shorting from it is a possible setup. But for me, I don't take anything that's not at least 70% or better. So therefore, technically speaking, one could short off of that. You can see that 1, 2, 3 times there's a trade, and maybe the 4th time it doesn't work. Hey, that's 75%, not bad. Over time, it's about assumed to be 60-40. And therefore, when it's a B setup, the only thing I don't do is short B setups. I only long B setups. So I'm more likely to take the long trades on res rather than the short trades, but it doesn't mean it's not possible if somebody likes to trade a lot. Instead, I miss out on a few more trades to not take a 60-40. But the answer is one physically could. Yeah, that's the point of this. And the idea is one can short from here to there, etc., as much as they want to. You're basically just playing the gap up, right? And deciding if the market's going to fill the gap or not. And it's really good for that. I personally just avoid it because I don't try to take every trade. I try to really boil down and hit like my 2 or 3 best setups. But sometimes that's all you've got. And then, there are people that short it. I personally don't teach shorting it, but it doesn't mean you can't. I just don't take 60% setups. Remember, as a win rate trader, I try to maintain a higher win rate than normal. I don't try to trade close to the coin flippy setups. But for some people that like to take big R to R trades, this is fantastic for, because clearly today, you made 160 points on that NASDAQ short with the negative resilience, then, you're a baller today. Those just aren't my style of trades, but they're really good trades for that kind of breakout trader, yes. It was designed for chasing the breakout in general. Somebody says, they're so happy to hear this. You've been working in indicators to help you and your system, and people think it's crazy or lazy for making custom tools. Jason, dude, don't stop, man. I was addicted to building my own path. And, Rocket Scooter is a collection of my mental craziness over the last 15 years. There's 15 different tools here. Every single one of them I made myself for different purposes, like custom tools. There's nothing better than you creating a freaking jetpack that matches your body. You know what I mean? Like, don't try to fly in someone else's spaceship. Literally, like, build something that matches you, because you can create something that makes sense to you. And that's not a wasted effort, because most of what's out there isn't an edge. Technical indicators, candle patterns, chart patterns, bull flags, bull pennants, even ICT stuff. None of that's really an edge. It's just guidance. But if you create your own tools, you have a high probability of creating something with an edge. If you're diving in a clever way like I did, it's an obvious edge. Index is tracking the stocks. Yes, we all know that. So if the stocks move first and the index hasn't moved yet, that's an opportunity. So that's an obvious edge called arbitrage. And arbitrage is the greatest place to look for to find edges. If you guys are trying to create your own tools, try to exploit arbitrage. Futures are tracking stocks after all. Is there something the stocks can tell you that the futures hasn't picked up on yet? And can you act on it, right? Definitely not wasted effort, man. Keep it up. Yeah. So anyhow, that's one of my cool tools, resilience. Yeah. And I named it resilience because I originally was like, when the market gaps up, how resilient is it to sustain this move? And if the resilience was bad, then the gap would fill. So yeah. Yeah. Oh crap, I'm out of time, you guys. Man, I've been talking this whole time. So I appreciate it. Now, I've been on this show for like 4 or 5 months. I think I've never really gone on a deep dive into some of the stuff that we do at Rocket Scooter, by the way. Rocket Scooter is an engineering hub for a bunch of folks like myself to create cool stuff. Here's info. Let me give you guys some links. I never really talked about it as in depth as I have before, but here's the link where you can see all of my tools and stuff. And also I stream live as well, as Abby's posting the link there. Thanks, buddy. You'll be able to come watch me trade, and I talk about it more there, but yeah. I've never really given you guys a deep dive into some of the stuff we've done, but all the stuff that I have is a different kind of clever use of information. Try to make it slightly different than what's out there, yeah. All right, great show. Glad to be here with you guys. Don't forget, try your MyFundedFutures scale account, the 6,000 payout. It's pretty darn good now. It's always been good. Now it's great. Compared to those other guys out there who smaller payout with activation fees. MyFunded's where it's at, man. Love you guys. Thanks for tuning in. I'll be live in my afternoon stream. You guys can hang out with me. We'll chill. Let's see if I can't get some a link to my reviews. Yeah, hold on. Before you guys end the show. Yeah, let me give you guys the link to the reviews. I'll show you. Like I said, it's very important to see what people say. I'm not much of a salesman. So here's reviews of people that have used our tools and stuff. Again, like I said, I wasn't trying to make this a commercial for myself. Now I feel bad. But you guys are asking all day, but here it is. On the page, these are the reviews. And you can read what they say. There's hundreds of them, and they're pretty much all 5-star. The people that have taken it, that's why I have a big following. People really enjoy this style of teaching. And yeah, so this one just says you won't regret it. I don't know. Anywho, yeah. So go read the reviews. I post a link for y'all. Check it out yourself. Like I said, I don't want to sell y'all on an idea, but if you like something cool and different, that's where we are. Okay, I'm out. I'll see you guys. Enjoy your day. I love y'all. Bye-bye.
Yeah. Charts scribbled like hieroglyphs, secrets in the mist. Candlesticks whisper, every wick got a twist. Fibonacci spiral priced in.